Markets are unpredictable, volatile, complex, but your trading journey doesn't have to be. Hola Prime TV is now live. Every trading day, join top coaches as they break down real-time setups, key levels, live trades across Forex, futures, and crypto. From Tokyo's early momentum, to London's open surge, to New York's high volatility action. We decode every move live. Get sharp analysis, clear strategies, and insights that actually make sense. And yeah, we don't just break down charts. We crack a few smiles too. Only on Hola Prime TV. This is more than content. This is infotainment and beyond. Markets are
Hola everyone. Hello Coach Tiger. How are you doing?
Howdy, howdy, howdy. How's it going?
Another day,
All's well
another
over
day.
here.
Good
That's right.
stuff, good
Another day,
stuff.
another dollar. Another dollar.
Yeah. Another
Yep,
day,
yep.
another dollar.
How's the rest of your day yesterday?
Yeah, relatively relaxed. We're going camping tomorrow, like right after the stream we'll leave for a little bit of a long weekend. It's my son's birthday and his best mate as well. They have birthdays 2 days apart, so we're going not really camping, more like glamping.
Yeah,
which is
that's
quite
the
nice.
best.
Get away out into the nature a little bit, away from the city buzz.
Yep, yep. That's good. That's nothing better than doing a little glamping, especially when you got a decent bed to sleep in rather than a hard floor on the ground on a tent, in a tent.
Exactly. I'll tell you what, it's I've done that with the boys almost twice, 3 times a year until about 2 years ago. It's like I'm done with sleeping on the floor. Well,
Yeah,
you get those blow-up mattresses, but they never last. They always get a puncture or
yeah,
something stupid like that, and you end up
yeah.
sleeping on the floor.
There's usually a rock or something underneath the tent that you never see when you put the tent down, and it
That's
ends
right.
up poking
Or a
through.
thorn, something sharp, and it's just
Yeah,
I can't do it anymore. I'd rather have the
yeah.
comfort, Yeah,
I'm right there with
it'll
you.
be fun. It'll
Yeah,
be
heck
fun.
yeah.
Maybe like a little break before festive season, which is also around the corner.
Yep,
Yeah,
light
what's
up a
your plans? I
campfire,
mean, it's not Friday yet, but
have a few bubblies, roast some marshmallows, something like that.
s'mores. Do you
Some
guys
s'mores,
call it that? Yeah.
yeah,
We'll
yeah.
probably have that over the
That's the
weekend on the
best.
fire as well. Yeah.
It's a heavy,
Sweet
heavy
tooth
sugar
tiger,
rush.
they call it.
Heavy sugar rush, that's for sure. Yeah, I can't
Yeah,
really
for
do all that
sure.
much sugar anymore. It messes with me. Like when I have a drink, I always get sugar free. The sugar messes me up, man. It gets me turning cartwheels for about 30 minutes, and then I crash out and burn. So I try to stay away
Yeah.
from all the sugar. Yeah,
Like
but
a
you
young
can't
kid.
avoid it with the sport. Yep. No.
No,
Yeah, I quit
you
sugar
can't. You can't.
several years ago. I don't drink soda anymore. I'll have a sugar-free energy drink once in a while, but that's about it. Yeah.
All right. Except for the
Yep.
Zag nuts.
Those elusive Zag nuts. Yeah, I'll eat those and crash and burn with a smile on my face. There's a big difference there.
For sure,
Yeah,
for sure.
probably like 15 years ago, a couple of my friends I used to run around with, their brothers, and they made each other a bet on who could go the longest without drinking soda, because they used to drink soda all the time, like Mountain Dew and Pepsi and all that. And so they made a bet with each other to see who could go the longest without one. And they, at that point, had went like a couple years without even drinking it, which was unheard of. And so I decided to jump on as well. And because I used to drink like 3-4 Mountain Dews per day, like that was my caffeine. That was my energy throughout the workday back in my very early days out of the Air Force and out of high school and all that. And so I realized I was drinking too much at that time, too much sugar. I'd have one in the morning when I woke up, first break, lunch, and then usually another one after work, just to kind of power me through the rest of the evening. And so, I decided I better do the same. So I did that. And that was about 15 years ago at this point, or there around about. And I haven't touched them since.
How can they get addicted to like those fizzy pop drinks, and almost like go through like what they call withdrawal symptoms when you actually stop it, or like mood swings. Sugar is powerful, man. Lots of people are addicted
it
to
really
sugar.
is. And now the rare time that I'll have a Pepsi, like I'll go to my mother's house once in a while, and she always stays stocked up on Pepsi in the fridge. And once in a while, I'll start drinking one, and it happens every time. I get that sugar rush. I'm like wide awake for like 20, 30 minutes, and then I just sit there on her couch and just start drooping and falling asleep on the couch. So I can't do it anymore. My body is not used to the sugar.
Doesn't want it anymore.
Yeah. I mean, I love ice cream. That's probably the sugariest thing I have, but I'll have it late in the evening when I know that I ain't trying to be productive and I can lay down and relax. Never early in the day, though.
The philosopher just joined us. Good morning. Welcome.
Good morning.
Don't recognize the name. Where you guys from? Where you from? We'll be jumping into the charts very, very soon, guys. We were just having a little bit of a chat, waiting for everyone to join the stream. But to anyone watching, thanks for joining, as always, right?
Yeah, absolutely. And let us know if there's any specific charts you want us to look at.
Says yesterday, discover this channel. And today, trade Forex together. Nice to meet you all. Yeah, welcome. Thanks for joining. So please do stay tuned. We'll see if we can get into some trades. Maybe Tiger, I don't know if you have something to show as of yet, and then we can switch to mine, or I can start. Do you mind?
Yeah, that's fine. We can roll over to mine real quick. I still have that trade going. Back end, if you want to flip over to my chart whenever you get a chance. And
almost got stopped out on, and then we decided to pay you big bucks.
Yeah. I gotta say, I mean, trail stops. It's important to give them room to breathe whenever you have the swing trades going. And
right, can I switch to Tiger screen, please?
Yeah. So I kind of lucked out because I just perfectly twice in a row placed my trailing stop in a best spot. My chart, please. And I thought a couple, and honestly, I'm not even like worried about it because Canada dollar is still the highest scoring pair right now, the most bullish pair. It's up to a 16, Richard. This thing's up to a 16. Look at that. Yeah, so this is officially the highest score I've seen on a currency pair since I've been using the Edge Finder.
Wow.
Yeah, you got 4 neutral reports. Other than that, everything else is being favored by the dollar, U.S. dollar, over the Canada dollar.
The highest you mentioned a while back was gold or something. Was it 12 or 14? 16 was really high.
Gold was like a 7. Gold was a 17 at one point. So,
really?
Yep. And this is now the strongest currency pair I've ever seen on here, which is odd, being in the middle of this crazy shutdown that our government's in.
Yeah.
I would have, just from listening to the mainstream news and all the finance channels, you'd have thought the dollar was about to fall to pieces because of it. But the government shutdown, to me, is nothing more than just an extra box on this list of everything I track. All the fundamental analysis data, the PMIs, the inflations, the GDPs, everything. To me, it's nothing more than just another box on here. And if anything, I would color it red, right? So that would be the one red box on here, and as far as I see it. Because when we look at the updated, up to the minute, latest and greatest surprise meter, look at where the dollar's at. It's actually shifted to 67%. So it's now easily the stronger of the 8 major currencies. The euro is second at 60%. It had some good data as well. But look at the Canada dollar. It's all the way down to 13%. So it's now the weakest currency, and then the dollar is now the strongest currency. So as long as I have a big disparity between the two, there's no reason for me to get out of this trade. So, and of course, I'm going to keep my trailing stops going, but this is, let's see here. Let's do this. So this is the updated US dollar heat map, where we can see the recent reports. October 1st was obviously yesterday. That was obviously a terrible jobs report. Okay, that was the one lone blemish, if you will. And it was also revised down from the previous period. So minus 32K on the actual number, but again, the previous score, this was minus 84,000 compared to the forecast. But also the previous ADP report was revised down another 50,000. So you add that to the minus 84,000, it was actually a minus 130,000 job disparity when you add in the revision. So this number doesn't make it look as ugly as it really was. But just imagine that should be minus 130,000. This is simply going off this recent report from yesterday. So very, very similar to the ugly non-farm payroll report that we had, a couple weeks ago or whatever it was. And so that was the lone blemish. But other than that, we've had these 2 job reports come in pretty good over the last week. Again, the orange dates you see are within the last 7 calendar days. So the jobless claims number came out a lot better than expected, 218 as opposed to the 235 they predicted. And then the JOLTS job openings just a couple of days ago was about 100 and I don't math, 140,000 job opening difference relative to the forecast. I think I did that number right. So another bullish number. These two squares were red prior to this last 7 days. So that was partly why the dollar was doing so bad as far as the scores over the forecast or under the forecast. So we've gained a couple blue boxes there. PCE report, of course, was neutral because they did actually meet expectations on the forecast at 2.9%. And I believe that was a red box the previous time as well because it didn't quite meet the previous week or the previous forecast. So that went from a red to a neutral, red to a regular gray box. So that's +3. The ADP report was already a bearish report from the previous, so that didn't really affect it. So essentially what we gained is 3 points just off the blue boxes, changing from red to either bullish or neutral. And then the PMI data, that was already a bullish box from the previous time, I believe it was, and then the GDP number as well. So all blue. And then the one red box that I would put in my head, obviously, for the government shutdown, right? So 67%, that's now looking pretty decent for the dollar. And the reason I'm staying in this trade is because if I look at the Canada surprise meter, look at this. It's all red,
The red.
except for the one bullet short they had earlier.
Mm-hmm.
Yeah. So that's, to me, a no-brainer, right? Buy the
Clear
dollar,
as
sell
day.
the Canada. Yeah. And stay in the trade
Mm-hmm.
and milk it for all it's worth, right? So that's why I was, even when I had that sharp move, the moment it touched my demand zone on, well, at this point, what, Tuesday? Was that Tuesday? Yeah, I think that was Tuesday when I got the trade. Yeah, once it did that, to me, it's no surprise that if I go to the dollar Canada dollar pair, that's just no surprise why it just smacked into my demand zone down here and just shot up like a rocket. So yeah, nice. Slammed into it, collected this liquidity here from all these people buying right here. They put their stop losses down here, which is sell orders, which the banks love sell orders to fuel their buy orders, plus unfilled orders from the demand zone itself. Shot up like a rocket. Immediately collected liquidity up here, kind of came back down, went sideways, and then ultimately shot up again.
Maybe a little day trade there. It could maybe be tracing our little triangle that we could potentially track during this session, or a double zigzag.
Nice.
Obviously still, obviously we can't say obviously for sure, but bullish, with a bullish outcome. So good you're saying that.
Yeah.
Let's see how that goes.
Yeah, we kind of had this Chinese walk action go.
For decent.
I call it the Chinese walk. Call it a cup and handle, or whatever people call it.
Could be a little
cup
and
more of a
handle, wonky cup and handle as well, with potentially the handle forming now.
Yeah. Yeah, that's it.
Not that I really trade that pattern, but but it's commonly taught pattern, right? Sometimes it's a bit difficult to actually see it.
Yeah. Yeah, that's basically what we've drawn. There you go, steaming cup of espresso.
I'm just going to add that to my list as well.
Yeah.
Don't know why I took it off the other day.
Yeah, and after it kind of made our little handle part there, again, for those cup and handle traders, we did kind of form another little demand. Price came up and ran into this. This is a 30-minute supply if I scroll back out. So that's the one thing that I was aware of, knowing that whenever price broke this high again, it shot up. I knew it was going to bounce into it and then ricochet back to the downside. But, at that point, I had already moved my stop loss. My stop loss is currently right in this area on my main broker. Because, the way, I look at this as a 1 hour demand right here that formed. Now it pushed through, it ran into that 30-minute demand or 30-minute supply. But I'm just going to use this as a reason to stay in the trade and just keep my stop loss under it. And then, really the next step from here is just I want to ensure, hopefully, I can get price to come through and close through the top of the rest of this 30-minute supply. If we can get that movement, then I'll move my trailing stop loss from where it's at currently to probably just right under here. Make sure that I incorporate this little low point here. So, yeah, and just keep milking it for all it's worth, right? That's really the goal.
Milky.
It would have been real easy for me to close this trade out after the first hour when I was already up $1,500, $1,800. But I was looking at it for a bigger picture, a weekly, keep it open this during the week, because dollar Canada dollar is going to pay me the carry trade as far as, positive swap fees. So I wasn't worried about getting charged at the end of each intraday session.
Okay.
But yeah, coupled with the strong fundamental score, let's stick with it. So yeah, I initially started my stop loss down here, but yeah, like I said, I've since moved it all the way up under here. Dollar Canada dollar moves kind of slow. It doesn't really move, but about 50 pips a day on average. And So that's why I'm okay giving it kind of a fairly narrow wiggle room, if you will, as far as the stop loss goes. So that's kind of where we're set. That'll be my next goal once we break this top. So
that previous green candle before that 1 hour, because it's in the green box, did it actually wick below that previous wick within the box? Because
you
on my
want
chart
this one
it
here?
did. No. Where price is currently, the current candle,
Yeah.
yeah, that one. Did it wick below the
Yeah.
other wick?
You talking about this one here?
No, it's my price. Yeah, that wick. No, it's above that wick. Oh, these
Oh,
data
is your
supplies sometimes the different ones. So my wick is below that wick.
yeah. That's just the joys of the differences in brokers. See what it looks like over here. Yeah, I see what you're saying, because here's
Right, I
GUI
see.
trades.
Yeah,
Is that looking
yeah,
more like what yours shows? Yeah.
yeah.
Yeah, that's definitely a difference, isn't it?
And that can mess up patterns and stuff, right?
Yeah, it could. I mean, if
Those
ever
two
I'm like
narrators asking, why did Tiger draw a fried egg? It's not a fried egg. It was his
fried
attempt
egg.
at handle formation.
Yeah,
Steve narrator.
that was my spin on the cup and handle formation. No sleep, but it kind of stretched out. Looks more like a walk. But yeah, I just did a couple handle on cup and handle. Got to be colorful.
Right.
So anyway, that's yeah. I'll be definite. Today's Thursday, so I'll definitely be closing this trade out no matter where it lands tomorrow, because with the government shutdown, last thing I want to do is chance a big gap down and take away all my profits. So,
Yep.
but coming into Sunday/Monday, so. But it's definitely the trade of the week, definitely the trade of the month. Probably one of the trades of the year for me. I'm getting some warning messages. Oh, never mind. Lenovo.
Good stuff.
What else have I got? Looking at my top setups. So yeah, NASDAQ and Dow, they're tied at a 13. Okay, those ones really jumped since our session yesterday. I think they were like a 5 yesterday for the NASDAQ and the Dow. So let's get an updated look at that. Yeah, here we go. So there's your NASDAQ right there. Just looking for a simple return to a couple different demand zones. We got a 1 hour in here. We got a 4 hour in here. Pretty decent confluence. Kind of riding this upward trend line as well. It'd be a nice little confluence. Those demand zones pushed price above this high, and above this high over here, just like a hot knife through butter. So to me, there's some strong price action going on in there with some decent volume as well. That's obviously the New York London overlap. So that's my favorite, right? That's my favorite place for a demand or a supply zone to be created, is during that overlap. The overlap, of course, that's this golden color in my background. The orange color is London only, and then the green color is New York only, but then the golden area is where London, New York overlap. And then obviously Asia would be the red. I colored it red on purpose because red means don't pay too much attention to it. Be careful, because whenever zones are formed in here, a lot of times it's on low liquidity and they're just not as strong. That's usually where most of my blue bars formulate on the higher time frames, is during the Tokyo session. So Tokyo session, I love looking at gold, silver, Bitcoin sometimes, and the Asia Pacific active currencies. So Aussie dollar, New Zealand dollar, Japanese yen, right? This is obviously NASDAQ, so it's not going to fall. It's closed. The NASDAQ traders are typically sleeping. So usually you get a lot of sideways junk like this. Once in a while, you'll have price move on some lower liquidity. But again, when New York and London overlap, You get a demand zone created. Woo! That's my favorite. That's my favorite right there. That's my favorite ones to trade.
No sleep narrator. Asking, have you guys heard or seen any recent news that are keeping you on your toes? By the way, we got news in 4 minutes today, Tiger, not 3:30.
Okay, sounds good.
So yeah, I'm sure Tiger will go through a few of those things during the news reading. But yeah, certainly I think for both of us, the ADP numbers were pretty crappy yesterday. Then you got non-farm tomorrow, right? So definitely, if that's a bad number,
Maybe.
print again. Probably lots of volatility. And also the government shutdown, right? A little bit of uncertainty happening there as well. So keeping me on my toes, I won't say too much. So
trade price action.
yeah, just wary of it. Used to all of these things during the years, right? Lots of fear mongering.
Yeah,
That's for sure. Yeah.
End of the dollar. End of the U.S. Gold's going to 10,000. Right? Get all these crazy things, but the most recent reports I've read have shown that we may not get NFP tomorrow, so we may be flying blind. Because there's only like one person. Yeah, there's only like one person out of the 2,500 employees that work at the BLS, the Bureau of Labor Statistics, as well as other, obviously, spots in the government. And I was joking with Coach Tony last night on Quiet Markets that I'm sure they're probably not going to be too worried about the NFP. They're probably going to be scrubbing toilets or mopping floors in the building, vacuuming. They'll probably just be doing random chores or maybe security or something of that nature. They probably ain't going to give a crap about our measly little NFP report. So we'll see. But
likely not.
Yeah, by all accounts, it looks like it might be delayed. So that's unfortunately that's. I mean, it's still on the calendars, obviously.
But they actually put that as a notice on, let's say, Forex Factory or whatever. It's like delayed, or what's that word they always use? That when it might come out?
Postponed?
Tentative. Isn't it?
Tentative. Oh, well, and that's the thing. Yeah. So, yeah, that's exactly what it says. So we're getting the same thing that they put on a lot of Japanese.
Right, I haven't checked. Yeah, so...
Yeah, it does say tentative now.
Well, just enjoy your Friday and just sit on your behind and not trade.
Yeah, just like today for unemployment claims, right? It says tentative there as well. So anywhere you see a tentative, that's translation for ain't nobody here to update these numbers for you, right?
I'll be doing the barbecue on one hand and the other hand check my trading view chart on my phone.
Yeah,
see what happens.
Which hand are you going to hold your beer in?
I got one of those hats with the two holders, and I'll use those. It's funny. I actually got one for my Christmas. It's like a joke. I've just used it once and was like, nah, keep that away.
Yeah, you can put two in at once.
All right, guys, we got about 5 seconds for the news. We're going to switch over to Tiger. Please do stay tuned. He'll bring us the newest and latest, what's coming up on the news front, economic news front. So please do listen into that. Rather entertaining, mostly. And we'll be diving back into the charts right after. So, guys, we'll see you soon. Over to you, Tiger.
All righty. What's going on, Forex Fire Nation? Strap in and get those charts ready because we've got a lot to unpack from yesterday's market madness and a look ahead to what's cooking today. So it was a day where the U.S. government decided to try out a new minimalist aesthetic. You know, the lights off, nobody home look, and the markets, for the most part, just shrugged. It's like everyone saw the shutdown and said, been there, done that, bought the t-shirt. The real drama was hiding in the economic data, or should I say the lack thereof. Excuse me. Going through puberty again, it sounds like. Let's start with the star of the show, gold. The shiny metal is taking a little breather after its recent record-setting sprint, kind of like an Olympic sprinter after breaking the world record, just leaning against the wall trying to catch its breath. It's consolidating near all-time highs, and who can blame it for being a little tired? The combination of a risk-on move in the equities world, with stocks climbing high for a fourth day, is acting as a bit of a headwind. But don't count the bullion out yet. The US dollar is still looking a little pale and interesting, weighed down by rising bets that the Fed will be cutting rates not once, but twice more this year. This came after the ADP employment report yesterday basically showed the private sector playing a game of musical chairs, and 32,000 people lost their seats in September. That was the biggest drop since March of 2023. So with the dollar feeling queasy and geopolitical tensions still simmering, gold, well-established uptrend, is still very much in play, even if it's a bit overbought and needs a nap. Now, speaking of that wobbly US dollar, the greenback is stuck in a bit of a rut, kind of like a car spinning its wheels in the mud. The US dollar index, the Dixie, is struggling to find any real traction after that dismal jobs data. It's like the market looked at the ADP report and immediately started pricing in a near certain rate cut in October, as well as a high probability of another one in December. And to make matters worse for the buck, the ISM manufacturing PMI data, while slightly better than expected, is still in contraction territory for the 7th month in a row. So the factory floor is still looking a bit gloomy. Add in the partial government shutdown, which has everyone wondering just how long this political theater will last, and what the economic impact will be, and you do have a recipe for a dollar that just can't get off the couch. The real kicker? We might not even get the main event, the non-farm payrolls report, on Friday because, of course, the government statisticians are on a forced vacation. It's like preparing for the Super Bowl and then someone cancels the game. Over in the land of the rising sun, the Japanese yen is putting on a fascinating display. It is ticking a bit lower as safe haven demand recedes, but its downside is looking very limited. Why is that? Well, because while the Fed is over there talking about cutting rates, the Bank of Japan is quietly sharpening its knives, looking to hike rates, potentially as soon as this month. It is a classic case of monetary policy divergence, and it's making the yen a tricky beast to trade. So even though the risk-on mood is putting a little pressure on the safe haven, JPY, the overarching theme of the Bank of Japan getting hawkish is providing a solid floor. The US dollar JPY pair is therefore caught between a rock and a hard place, and it'll take a lot more than a government shutdown to confirm its recent pullback is over. And meanwhile, the commodity currencies are having a mixed day. The Australian dollar is holding its ground despite some truly woeful trade balance data. The surplus absolutely cratered, falling to 1.8 billion in August against an expected 6.5 billion. It seems that the gold export boom took a month off, which is ironic given the price of gold. But the Aussie is being a tough little fighter, shrugging it off as traders focus more on the global risk sentiment and a weaker US dollar. The Kiwi, New Zealand dollar, it's also scaling higher for the 5th day in a row, benefiting from the same lack of US dollar demand. It's like these two are the party crashers who showed up anyway, even though the host, the US data, is having a meltdown. And we can't forget the loonie, the Canada dollar. It's feeling the heat from its own domestic data, as the manufacturing PMI data fell deeper into contraction territory, marking 8 straight months of decline. It's like the Canadian factory sector is stuck in a never-ending episode of a sad documentary. This weakness in the Canada dollar is giving a boost to pairs like EuroCAD, which is climbing higher. Speaking of Europe, though, the ECB President Christine Lagarde was out saying that there are no serious threats to the inflation outlook, but they will stay vigilant. It's the central bank equivalent of, I'm not touching you, while holding their finger an inch from the market's face. And finally, let's talk about the wild ones. Silver is clinging to gains above the $47 mark. looking absolutely fabulous near its all-time highs, basking in the safe haven glow of the U.S. government shutdown. And oil, poor oil, it's trying to stage a comeback after a rough few days, trading near $62 per barrel. It is getting some support for geopolitical risks, as well as talks of tougher sanctions on Russian crude, but it's also being weighed down by the prospect of OPEC Plus deciding to pump more crude next month. It's a constant tug of war, and right now it seems like both sides are equally sweaty and determined. So for today, with key U.S. data like jobless claims and the big NFP report potentially delayed, again, they're showing tentative on our calendar, we're all going to be hanging on every word from the various Fed speakers. So it's going to be a day driven by rhetoric and technicals. So make sure your risk management is tighter than a drum, because in this environment, volatility can come out of nowhere faster than you can say Forex Fire. And then lastly, economic calendar, as always. Yeah, as mentioned, unemployment claims, they've changed the time to tentative, okay? The CPI data for the Swiss franc did come out a little while ago. That met expectations right on the dot at minus 0.2%. And then later on at 9:05 Eastern Standard Time is Bank of Japan Governor Ueda flapping his lips. So that's about all I got for now. We'll keep an eye on the news, see if they do get any more updates on the NFP or any of these reports as far as the times or lack thereof. So that's about all I got for now. We'll get back into some charts. Back to you guys.
Hello. Thanks, Tiger. Thanks for that.
Yeah, it's
cool as usual. I'm just laughing here. We're having a giggle at the philosopher. It's like Simpsons predict market crash.
hey,
It's
you know
crazy
what,
how a lot of the previous shows have all become true, huh?
yes, exactly.
I think it's a lot of like brainwashing, or like, planting a seed in your subconscious, showing you what's going to happen, and then it happens, sort of thing.
Yeah, I think the Simpsons secretly are speaking to people in the Bilderberg group. If you guys don't know who the
something weird.
Bilderberg group, go look them up on Wikipedia. They're like a secret underground society that meet up, but they don't exist according to our government, or various governments, I should say.
Which the top people are all part of.
Yeah. Yep. Yeah. So anyway, yeah, that's going to be funny if the Simpsons are predicting that. I'll have to go watch. I might have to start watching the Simpsons just so I can get my future news. That's actually not a bad idea, is it? Yeah, that's another video. That's another interesting thing to look up on YouTube for you guys and gals sometime. Just go type in Simpsons predictions compilation, and you'll see where they have pretty successfully predicted quite a bit of stuff. So enough of that silliness. That's funny.
Yeah.
I got other.
It is pretty silly.
Yeah. Did you have something you wanted to share? I got plenty of other alerts, but I can see. I'm open to seeing what you got going at the moment first. There, Richard.
Yeah, let's have a look through my charts a little bit quick. I'll show you a few things, guys. Let's just get to the right time frame going here. So that is the dollar US dollars price, dollar yen's price action, right? So a very strong decline. Obviously, again, done a pretty good job in actually identifying the pattern, but failed to actually get into the trade and did not chase it. So one heck of a strong move lower. So yeah, could have, should have scenario, not in that trade. But I'm interested though to trade this back to the upside actually. But did expect that once price reaches that area, and if I was right about the pattern, which is now I think about, I'm almost 99% sure that it was a megaphone pattern, that will get a very strong reaction or decline from it, because it was a bearish formation, right? Why? Because we have a drop and then the pattern starts. right?
Yeah.
It didn't start after a move to the upside. It started after a move to the downside. We also have this channel that I've drawn sloping to the upside. Just drew a line parallel to one of the channel lines and projected it from this low over here. You know, just to give me a little bit of an area that I'll be interested in if price should reach it. Maybe I should just lower that alert of mine just a little bit more. So I'm assuming there's a really good chance that price will take out my D low of this pattern, 145.48. That happens, price gets into this area, then that would potentially be a very strong area to maybe go long again. What was your dollar yen score again?
Yeah.
You
Yeah.
did say
So it's
earlier.
neutral. It's neutral +3. But something to point out as you were talking, you got the very same megaphone pattern on a 5, 10, 15-minute chart. If you scroll down to that, you'll see it. And it actually did drop in to it actually dropped into a little 5-minute demand where that big wick was. And then it popped all the way back up to the top of that little range. So that would have been
Yeah.
a good trade. I'm just now seeing. Of course, yeah, that's when I was asleep.
Let me get rid of. Okay, two things I'm seeing. Well, one thing I'm seeing here is it'll be very rare for this pattern, although it's not impossible, that you'll have a move. Let me get my. So we have a move higher, right? And then you say this looks like a megaphone pattern, right?
Yeah.
It
Yep.
certainly does.
Yep.
A, B,
Yeah.
C, and then we actually hit a high above. There's also this wick here. So this
Yeah.
could be doing this, and then hit higher, and then move lower. Because if we're clearly in a very strong downtrend, but you know,
Mhm.
your most common corrections are A, B, C's, A, B, and C, right? If it would go higher from here, and we don't get a strong decline, and you know this definitely what looks like a megaphone pattern turns out to have a bullish outcome, then I'll still be bearish, because all I'll be seeing is that the B wave.
Yep.
Let's just mark this for those that understand. A, B, C, correction, right? Now this triangle here could just fool everyone thinking I go short from here, instead go higher. It could be the B wave. So you have a triangular B, if that makes sense.
Mm-hmm.
Could potentially be what we're seeing here. So an A, triangle B, C. Right, so you have a combination of where your B wave might be a transformation. Might, guys, might. Because if it
Right.
keeps on dropping down from here, because you know you want to see the triangle formation to look nice and neat, right? So what do I mean by that? So clearly this looks really neat, right?
Mm-hmm.
Where's the other drawing? Yeah, this looks really neat. Look at that.
Very nice.
But you can't really say that the triangle started from here. Do you understand what I'm saying, Tiger?
Mm-hmm. Yeah. Yeah. Absolutely. Absolutely. Yeah. I just like
So,
that.
yeah, who knows? I mean, maybe this is, if we can get higher in the dollar yen, maybe this will be another opportunity to take a short here.
Yep.
If I miss it, if it does continue declining from here, still a triangle of some sort, but just had a, not triangle, a megaphone pattern, but just with a bearish outcome, which would also not surprise me, because obviously price has been hammered to the downside as of late, right?
Man,
But well
that's
spotted.
perfect.
Good that you said that. That's pretty interesting.
Yeah, because you can
Beautiful
sell it up
megaphone
top,
pattern there.
buy it back
Yeah,
at the bottom, and then buy it for the upside.
yeah,
Play
yeah.
back and forth, ping pong with it.
Ping pong.
Ping
Nice.
pong.
dollar CAD that you were looking on at earlier, if we had to just use my analysis here, forget about all of these colors. You were looking at potentially what I think is probably what's happening. Where's that arc of mine? So well spotted. I just can't draw it nicely at the moment.
Oh, yep. Oh, I forget there's that tool.
Potentially like a cup and handle formation. Something like that, right?
Yeah. Oh, yeah. Oh, show.
And I don't know if you know, those people that do follow cup and handle formations, you generally don't want the handle part to retrace much deeper than 50% or from the bottom of the cup to the start of
okay. 50%.
the eye of the cup. This is like me, filtering my old memory bank. I used to write PDFs for a company on all different types of patterns. And what's the pros and the cons, and what makes a really good pattern work out better than the other. And I think that was just one keyway. If you get a retracement much deeper than your 50%, right, well, it could still work out, right? It's just like the odds then become less that it is actually a cup and handle, or that you're going to get a strong breakout to the upside, right? So price almost needs to prove itself that it doesn't really want to go lower too much. Does that make sense?
Yeah.
So
unless you're
the handle part,
unless you got a gigantic hand and you need a bigger handle, right? But yeah, no, I see what you're saying.
Yeah,
no, I agree. Yep.
So maybe this could just be an A, B, C in itself. It'd be nice if we can get sort of into this area here. Reason being, we got the lower end of a channel. And here I used this low with that low, not this low here. Because if I do that and then bring it to the area highest, diagonally up from these two anchor points, then it perfectly caught that recent high here. If I use the other angle, then this sticks out way on top of the upper channel line, so which is perfectly fine. The market geometry is a visual tool. There can be subjectivity involved. Doing the same thing over and over, which anchor points you use, doesn't always work. So you got to think out of the box sometimes. That being said, now that I've decided that those angles are really important, you can see that the center channel acted as a bit of support, resistance a few times, especially on this recent lower high. So this still tells me that these angles are working really well. And then what I'll do, area where price undershot that channel, parallel projected from that low. Because if it hits out underneath the channel, it might do so again at the same distance. And that gives me confluence between this upward sloping angles and these downward sloping angles from the pitchfork, giving me, as always, an area of interest. You see I got a little alert there. Let's make that green. So if price can make it into that area, right? Hopefully you reach sort of like the lower median line, because where do zigzags generally end? At the upper or lower median line, depending on which direction you're sloping a pitchfork into of a shift pitchfork setting. I think I've shown this multiple times over. It works really well. But price could also slice through it, and if it does, maybe it could find support at the lower red warning line here. But then again, it would be retracing too deep into potentially the sources side of the actual cup. The source is what you put your cup on, the cup or the body of the cup, not the saucer.
Saucer.
Right, so
I haven't heard that word in a long time.
I'll be interested in this for potentially a little day trade. If we can get into it, maybe give it a little bit of a reversal vibe, maybe inverted fair value gaps, all that sort of stuff we actually talked about yesterday, then maybe tune into a 5-minute time frame and see if you can actually get into a trade with a decent risk-reward ratio. And if you have to do something like that and you target the top end of the cup, assuming that if this was a correction, price would then, break out of the correction, right? So offering a good 3.78. Obviously, depending on where you're going to enter, this looks like a really good trade thus far. Did not set up yet. It might just reverse upwards from here, but so be it then. But again, yeah, let's see if we can get that opportunity. You're already in that trade, so good stuff. I believe you're up substantially. So maybe we could see if there's another opportunity to join the move higher. Obviously supported by your strong fundamentals. This will be a trade I'll be happy to take myself on an intraday basis. Whether it works out or not, we'll see.
Yeah, it's been up
We've
around
got a lot of things in our favor, at least.
last 24 hours. It's been kind of bouncing back and forth between like 2,600 and 3K. So since yesterday's throughout Asia and the end of yesterday's New York session, I should. Just looking for that next move up. I mean, the cup, the handle itself is almost starting to look like its own little cup.
Yeah, it does actually.
We want to get funky.
But let's see. I'm interested in that area. It needs to move into it, and maybe get a good risk-reward ratio out of that trade. I think that's it from me from the currencies for now. What did we look? Did I look at the Euro USD yesterday? Oh yeah, yesterday I did get long. Do you remember that?
Yeah.
On the Euro US dollar. Yeah. But where was it? It was like, right at this area here. But not that area, this line around 1.1727. And what time was that? We're looking at a 4-hour chart. But anyway, guys, there was a spike higher after the ADP, and then price came down again. So I was already a little bit in the profit prior to the ADP news, which came out right at the time we ended the stream. So got out of the trade, didn't want to risk it. Price has been sort of, hovering sideways, very close to my entry. So yeah, I don't want to risk that trade going south or against me. So I got out there, at least a little bit of profit. I think it was like $27 or something. So nothing major, but at least, didn't gamble that, price will shoot up higher, which I think initially did anyway when the news came out. But it could have gone the other direction as well. So there's still a lot of indecision here, and I don't like trading news events. So yeah, we're holding during news events. So unfortunately got out of that. Might re-enter again, but still haven't really seen much strength to the upside here. But Murphy's Law, since I got out, now I'll probably start shooting to the upside. But let's see. Of course. Always does.
Of course.
Yeah. Oh, the AUD NZD trade. Yeah. Interesting. Last week, what was it? A week or two ago, actually, we were looking at the AUD NZD. And I think it was also very, very strong on your currency list.
Yeah.
And I tracked this up using multiple market geometry techniques, some channels, as well as a pitchfork that I've actually drawn or started at the anchor point. I didn't start drawing it back then, here from around March 2020 to the high August 20 to the low September 21st. And there's some evidence price has, sort of respected these angles. Not as nice or clean as it generally would, like on gold, for example. Really good market to use market geometry on. This is almost like some markets just lend themselves better to this type of analysis. Yeah. Pound US dollar also way better than the AUD NZD. But in any case, identified an area where we have confluence between three different angles, all sloping in different directions. And yeah, we've hit that point and we are actually moving lower now. So I'm thinking this could potentially be a fourth wave type of correction. Something maybe similar to, I actually want to get my brush out for a little bit. Maybe something like this that we've seen there. Could be something like this as well. And still be bullish. All right. So, and I'll be treating that as, now how do you stop that drawing now? There we go.
Right click.
Could potentially be a fourth wave. All right. I want to get into a fourth wave correction and then trade it back up again. Right.
Richard, can you give me just one moment?
It could also be that, no worries.
I'll be ready.
Okay.
1 second.
It could also be that we're just seeing like little pullbacks like this. And if they're very short-lived, like we've seen in gold especially, then this third wave might still be continuing upwards. How would we know if we're potentially dealing with the fourth wave, or the odds are, stacked in our favor that we actually are dealing with a fourth wave? Would be when price actually enters into a bit more of a longer term sideways to downwards move. A bit longer than these little pullbacks that we've seen here. Right? So that's what I'm seeing on the AUD NZD. Sorry, I just want to see if we caught up on all of the questions here. Guys, if you want us to have a look at any of your favorite markets, let me know. I'll definitely do that. All right. What's up next? Gold, obviously. Gold, the Power Ranger, if you want to call it that. And let me just get rid of that pitchfork there, and let's have a look at this again. I should be on a 4-hour time frame. Right, the philosopher, I believe the other guys probably seen this analysis multiple times before, but I was tracking the sideways move in gold from around July. I think it was around about at this low when price moved higher, and said that we could potentially be seeing a triangle formation. You're not 100% convinced yet that a triangle is underway until you assume you might get a D wave, and if you obviously get a move into a D wave, then you then need to get a drop lower. And the D wave shouldn't break higher than your B wave, or should at least fall in line with it. That's exactly what happened, and it was saying, okay, now yes, you got a high probability triangle that's coming to a potential end. And for me, the triangle, which was a symmetrical triangle, ended on the 30th of July, kicking off the next phase higher. And the next phase high will be tracking in a 5-wave sequence. I like to use pitchforks to contain price action, see where support and resistance from an angular nature might step in, and also to try to figure out where your next phase might end. Now, gold is notorious for entering extremely extended third impulsive waves. And by impulsive, I mean you have a very strong, almost like parabolic moves to the upside or downside, depending on which way you're tracking it, and very short-lived pullbacks along the way. So price is now broken above that pitchfork, but rather than deleting it, I like to just double it up,
Richard,
using the same angles I did before. Yeah,
Coach James wants to know if you think we're going down to 3,700.
$3,670.
3,700. I'm sorry, 3,670. I read that wrong. That's what I meant to say. 36.
Coach James, I think I don't know. I think the third wave is still underway. When we do start pulling back, right, we could obviously now just halt here. But again, just looking at what price action does, if we have a little bit of a more prolonged pullback that lasts a little bit longer than these little short ones, yeah, it pulls actually down a little bit deeper, then I'll say, yeah, right, we potentially seeing a fourth wave correction. And typically your fourth wave corrections, although this is obviously, you know, maybe just a little bit of a rule of thumb, not to be taken, you know, as a definite, is that your fourth waves generally pull back into a 0.382 retracement measured from the end of your second wave to the high of where you think your third wave ended. If that is the case, let me just get rid of all this mess. Then we could see, yeah, you're around about right there, James. Let me just get that 3673, maybe even lower. That'd be ideal. Also, if you see confluence between, let's say, a fib retracement level or any other sort of analysis technique with price also hitting one of your median lines, then that's typically a very good area to expect a fourth wave to end. Fourth waves also tend to break below the fourth wave of the lesser degree that occurred during this strong move to the upside, which could be, again, if I have to make this a little bit higher, maybe this could be a fourth wave. So it could be anywhere from 3716 all the way down to 3650. Could be an area. But this will become, I can fine tune that area a bit more. If price were to, let's say, start, you know, zigzagging lower. And then what I will do then is then just use a pitchfork again, right? Slope it to the downside, tracking what you assume is the correction, and then we have like X crosses the spot, so you have your pitchfork sloping downwards, direction of the trend, and you still have your pitchfork sloping upwards, tracking the actual major trend. Quite often when where they cross, you get a very good area of confluence, and therefore in this case support, potentially support for a fourth wave. 3760, yeah, that's what I thought. 3670. Which one is it? 3760.
Which one is it, Coach?
That could also be, could very well be, because here we have the center median line of that pitchfork as well. That's actually where I had this drawing yesterday, around about there. Also a potential target, yeah, for sure.
I love the 3670 because it's got a daily demand zone down there with a 4-hour demand inside of it for confluence. But yeah,
3670.
even if we are looking at 3670, but yeah, if we are looking at 3760, we can look at both of those. But yeah, 37.
Well, let's do this. We can just do that. And we'll see if we can actually like narrow it down a little bit later.
There we go.
Let's just do that, because this is gold, you know, because it might just pull it back in here and continue higher.
Yeah,
so
pretty decent demand.
I'll leave it like that. Just see if I can narrow it down. I think I'll be very accurate if I have to deal with big zones like this. This is the 4-hour time frame, by the way. Yeah. Hey, Nev, how's it going?
What's going on? What's going on?
All right. What's up with WTI? We looked at WTI yesterday, and maybe I'll just go through this quickly again for those that have missed it. Looking at patterns here exclusively, and more actually fractals than anything else. This pattern that we've seen over here, let me get my little drawing tool out. Let's use this brush. This pattern here, well, actually towards this area here, I think looks almost identical to this, although this one took a little bit longer to materialize. So almost like a fractal behavior that we've seen there, if that makes sense. Even if we do the following, just mark these little highs and lows that occurred during this move to the upside. We have the third one, and then we have that high, and then we have a strong decline, right? Now, if you have to bring this pattern on over to the side, right? A little bit of initial smaller swing, right? Where was it? Like this, like that. Well, I'm actually missing, I think, no. Yeah, I'm missing this one.
Superimposed.
It should be this. See, so it's a little bit different, but you've got the same amount of swing highs and lows than the previous pattern, which then resulted in a strong move lower. So it's almost like it's a repeat of that one from a fractional nature, and the outcome of it was very bearish. Now yesterday price finally broke below this low that was set on the 5th of September, but you see it sort of found a bit of support and tried to bounce back up again. We also have this gap here that occurred in June 2025, and we also have these clusters of lows over here. So I'm still thinking that crude oil can actually move lower, but I think it's in its last sort of descent before we're going to get a stronger bounce to the upside. So if you look at this previous pattern, where I say it's almost like this pattern is almost a fractal of what occurred over here, we're sitting around about here. Price finally breaks, you know, sort of almost out of the pattern, and then that bounce a little bit higher before next decline is what I'm thinking we're seeing here. A little bit of bounce and then continuation lower. Maybe all the way down here to, I don't know, 61-ish, maybe even 60-ish, and perhaps then find support, and who knows? I think strengthen again. That's my view on WTI. So very interesting to have seen that fractal behavior in crude oil. Yeah, so it's something that really interests me with these, you know, repetitive behaviors that we sometimes see in price action as well.
Yeah, I really
Right.
like
Any
the,
questions there, guys?
I like
And
the
let me know
60
any markets
50
you would
to
like to have a look at.
the 60
60
50 to
50.
61. Yeah, because on a 4-hour time frame, there's a nice little demand zone right at the bottom of that gap. So yeah, and you got all those, what is that, like a quintuple bottom? Something like that, where it's
Yeah,
currently poking
we were talking
through
about
and
this yesterday. So 1, 2, 3, and finally a break fourth. A little bit
collecting.
of as support, and might actually start accelerating lower. So what did you say? 60, 50, 2?
Yeah, if you go all the way over to the left, you'll
61.
see just below the 60 50 to 61, because yeah, if you go all the way to the left, you'll see that 4-hour candle right below where that gap starts. Yeah.
Yeah.
That green, that's the one I'm looking at right yonder.
This green one here.
Well, it's going to be that like fat doji candle, basically. Not the bottom green candle, but the second one. Yeah, right there. Yeah, I personally wrapped a rectangle around that one just to see if we could get any type of potential reaction off of it. That's the one I'm going.
Yeah, so this gives us a relatively large, you know, the gap falls lower end is still here at the bottom around 61.27. So I think we still have space here to fill this at least. Maybe get into yours. maybe even lower, but this whole area here could be a very strong area of support. It is, again, it's wide, pretty wide, but crude oil can very easily move that distance within a day or two. No problem.
Oh, show.
All right.
Problem child.
Control Alt Alpha. How's it going? How's it going?
Hello, hello. Hello, hello, hello.
All right, let me just keep an eye on dollar CAD quickly. There we go. Don't want to miss this if we do get a move lower. But yeah, hopefully we do get that little drop a little bit lower. It is moving sideways. Hopefully this is corrective with one more downside or down leg.
We got 39.31
into this alert set, so I'm ready for that to trigger and potentially get into that. So there we go. All right, Tiger, over to you, bud. What are you looking at?
Good. Yeah, I'd be all right if it comes down to 39.31 for you. Tap into. I've got my trailing stop at 39.21, so yeah, that would give a little bit of a. Oh, here we go. Yeah, so let's see here. Just going back down to that spot we're looking at. Yeah, so the way I'm playing my trailing stop on this, I've got my trailing stop all the way up here to 39.21, and I'm kind of looking at that really wicky doji, that 1 hour candle, because we did have a nice spike out of it for a couple candles. Now it did bounce.
1 hour, right?
Yeah, that was 1 hour, and then it did bounce into this 30-minute supply up here. I mean, if you look at it on a daily, a 1 hour, then you could say that it tapped into the 1 hour supply back here, but I'm also keeping an eye on it on a smaller time frame. Over here, we hit the 30-minute supply, which got close, didn't touch it, but it did touch the 1 hour, so let's be clear about that. So I'm not too threatened about this area. Now, we did get, obviously, a rejection off of it, but I'm also keeping in mind that, yeah, it is ugly, but we do, by definition, have a 1 hour demand. So for me to stay trailing in this, I just incorporated that with my stop off for my trailing stop. So that's currently where I'm at, right about there. And then now there's your 39.31 line that you're talking about. So it can come down to there, tap you in, but no more, because I don't think I want to take away any more unrealized profits than that, right? I already had price clear up here at one point. So yeah, that's my line in the sand.
Yeah, we'll still be sitting pretty, right?
Yeah, exactly. Yeah, I mean, my stop loss started way back here, obviously, so I've trailed it up a handful of times. So, that's currently where it's at. So,
nice.
And then, yeah, just kind of piggybacking off of your oil spot there. Yeah, I drew that gap in purple, but yeah, I'm definitely keeping an eye, because oil is given a +7, by the way, on the score, on the bullish bias, so on the top setup. So yeah,
that's what I'm saying,
just basically
it's sort of there, like supporting the idea that maybe just another flush lower, everyone's gonna jump on board and want to short the hell out of it, and what happens? The opposite.
Yeah. So yeah, there's the 4 hour candle. I wrapped my rectangle around, so that's where I've got my alert, kind of at the bottom of the gap, but just ahead of the zone. But I kind of drew in this little rectangle here, showing where all these people that bought, putting their stop losses. I mean, who knows how deep that goes, but somewhere in this area as far as all their stop losses, liquidity. So a lot of sell orders are in there from their buy orders, stop losses. So if I'm a bank, I'm trying to target that liquidity there, close the gap, and then hit the unfilled order potential that's in the 4 hour zone. And all of this price action, excuse me, is also in the context of a daily demand. So that's including the gap at the top part of it. So, I would have obviously a decision to make. Do I want to use the daily
Yeah.
demand as my stop loss, incorporate the daily, or do I want to, put the stop loss underneath the 4-hour candle that we just looked at? So that'll basically be the next decision I have if price comes down. How much do I want to give away on my reward risk ratio, or how aggressive do I want to be? So for the moment, yeah, we're just gonna leave it under the daily, because this would definitely be a multi-day trade as well. Hopefully it doesn't touch until Monday. If this touches Monday, I'd be a lot happier, because then I'll have all week to stay in that trade.
Yeah.
Rather than to get in it tomorrow on Friday right before the weekend hits, and then
Oh, no, definitely not. And that's crude oil, anything like globally with war or anything to do like that, you'll wake up with a serious gap against you if you're on the wrong side of it come Monday or Sunday's futures open. So,
so
try
if
to
we can,
avoid that. I wouldn't be surprised if it starts really accelerating lower tomorrow. And
getting
then,
that sideways price.
maybe into Monday, and then sets up and we get a reversal. But might be wrong about it. We'll have to wait and see, obviously. Yeah.
Okay, so here we were talking about the yen. I just got screamed at.
There we go, the
$5 yen.
triangle.
Yeah.
Bearish outcome.
So just looking at this thing earlier, we did hit this 5-minute demand. We had a gap above it. So we got pretty efficient price action from this more recent swing high. You have the demand, you have the little gap above it. Right there, there's the gap. Not a huge one, but it's a gap nevertheless. Overlapping candles down here. Now you do have another tiny gap down here. That's the one that just dropped in. So I saw this after the fact, but obviously that megaphone dropped right in that demand and just screamed all the way up to the top here. So that would have been a nice trade to the top end of the megaphone. But now, let me see here. So dollar yen is actually, I believe, on the top setups, let's see, it is, okay, so it's a neutral +3. So we're not getting a whole lot of help from the sentiment analysis. Technical analysis is given a couple points. Fundamental releases are given a couple points there. So, you average it all out. +3, technically a neutral, but not as worried about it on these smaller time frames. So what are we left with? Well, we do have this 5-minute demand, albeit really there's no gap above it. Price did have a nice push up, but it was not strong enough initially to break above this high and close. So that's another point against it. Really, the only thing I liked about that demand was the fact that, it definitely would be, potential liquidity under the megaphone and liquidity sweeps. Obviously, this was the play. I'm not too interested
again when that final high came in on that megaphone. You see how sharply price busts out of it. So we have the big megaphone pattern in itself, which price is still stuck in, and then we have a little small one within it again.
Yeah. So, that's that initial 5-minute zone, but you can see it just respected it perfectly, respected the bottom of the megaphone.
Yep.
Volume jumped in. This is half an hour before London opens. And then it just screamed all the way to the top. So that would have been a freaking perfect trade right there. You can just throw in your stop, 12 pips, 12.24, 36.48. So that's almost a 4-to-1. So that was a perfect entry right there that we saw after the fact, of course, right?
Yeah. After the fact. Happens a lot in trading. Tiger, before we go on there, guys, to all our viewers in the chat, again, thanks for joining, listening in today, wherever you're tuning from in the world. We are planning on, if you're new to these sessions that we're holding, we are planning on giving away another $5,000 Forex Challenge account hopefully during this session, right? So it's all dependent on 3 very important steps that you need to follow to be eligible to win this prize, right? So if you've won before, then unfortunately you won't win again. So that's the first one, right? But the 3 steps that's important to subscribe or, be in line to win this prize today. You need to subscribe to our YouTube and Instagram handles on both Hola Prime TV and global accounts. So that's step number 1. Very important, right? Step number 2, keep on commenting during this live session. That way we can go and pick a name that's in the chat there, see if you've won previously, and if you haven't, then we'll see if you followed the other 2 steps, right? And if you did, and the last 3rd step would be to make sure that you've linked your email to your YouTube bio, so we can actually reach you with your account details and get you all sorted and set up that way, right? That way you're also not dropping your email then obviously in the chat so everyone can see what your email address is, and you'll get a lot of either follows or spammers or whatever the case might be. So that's how we select our winners. Yeah, buy my course, or just get spammed by too many people. So we don't want to let you give away your private info there. So just please go and drop your email address in YouTube bio, and that way we can get hold of you. If you followed all of those steps, then you might be in line for today's winner prize, right? So if we can't find anyone, it might roll over to a later session when our other coaches come on board. So again, a real cool prize. We've been giving them away daily since we started Hola Prime TV. A lot of guys in the chat here already won prizes similar to this. So if you think you need a prize like that or deserve it, let us know in the chat why you think that is. Keep staying active. Like and subscribe to this channel. Share it far and wide. Friends, family, whoever, if they're interested in trading. And come and support us. Not just us, me and Tiger, but also the other futures coaches that come up after we're done with the Forex Fire morning session. So again, do appreciate your attendance. Keep those questions, comments rolling in, and good luck. Hopefully you win today's 5K challenge account.
Hey,
that was a mouthful. Let me have a sip of water here.
And especially in the chat, guys.
My purple vitamin water.
Oh, okay. There you go. Yeah, my voice is usually pretty shot by the end of streams as well. But get 24 hours to refresh it and ready to roll the next morning. It's funny because I kind of watch my streams on replay at times because I usually go back, see how the news piece looked just to see what I can do to make things better. And clear voice, and then I noticed by the end of the stream, it's like I'm talking like this.
Well, at least hopefully it's not too harsh self-criticism, right?
Oh no.
I think you're doing an amazing job with the news.
Thank you. But yeah, like Richard said, just chat as much as you want. It's just the 2 of us today, and I believe tomorrow as well. So you can act as our 3rd person. Just throw as many charts or questions or you want to know about the shutdown, anything of that nature out. And I believe
don't we have a special guest coming on tomorrow as well?
We do. Yeah, we do have an influencer joining us tomorrow.
So everyone in the chat, we've had the weeks back. Was it last week?
2 weeks ago we had a couple weeks back.
Mr. Godlove, really nice guy.
Yeah,
huge following. Really see his way, how he approaches the markets, doubles and everything, right? Indices, crypto, stocks, forex. It's a really nice guy. So we're looking forward to tomorrow's special guest. So do stay that, or sorry, not stay tuned. It'll be 24 hours from now almost. Join us again. Not that we're saying goodbye now to joining us. Bit of a surprise.
Yep, Mr. Kill DeMarcus. That's going to be the person's name. So yeah, it's always interesting to get fresh perspectives on the show and see what other trading styles and what other people have going on in the industry, right? We're all one big happy global family, so it's always cool to see different perspectives. So yeah, definitely stay tuned for that tomorrow. We'll let you know the times at the start of the show as well. So but yeah, just my final thoughts on this dollar yen that we were looking at. Obviously, that was the 5-minute zone. I'm down on a 1-minute chart now, but that was that 5-minute zone that had that strong push up for the 4-to-1. But just looking below, we had this potential spot right here. Price moved up pretty good, but just had a hard, heavy selling wick above it. Wasn't even able to close above this high. So that's a reason for me to ignore this. And besides that, we did have this other 5-minute demand at the very bottom. The problem with this zone is, okay, we had a pretty efficient market throughout here, meaning we had candles overlapping candles to the left. So
Yeah.
initially we didn't even have a gap there. So we had candles overlapping. Okay, here was our potential first inefficiency in the market right here. Well, we turned around, came down, tapped the demand. So we filled the gap, tapped the demand, flew up. So we got efficient market here, had a nice gap up here. So we had a demand by definition here. Again, we're all the way down on a 1-minute time frame. Price comes down, closes the gap, taps the demand, continues higher. So at this point, we're getting further away from the origin of the strong move. So the probabilities start to deteriorate the higher up you go. Well, we did have another little gap here, the tiniest of gaps from there to there. But yeah, again, it's higher on the curve. So you can see it just chewed right through it. So, but with all this being efficient up through here on a 1-minute time frame, I'm just not interested in it on a 5-minute time frame. Because on the 5-minute time frame, same thing. We really didn't have much of a gap. I mean, you had maybe a pipette of a gap from here to that wick there. the good old pipette. Right? But the trade to be had here would have not been that demand. It would have actually been this demand. Because we had a gap from here to here. What happened? Price lifted off, came down, closed the gap, tapped the demand zone, flew back up. So, old news at that point. So I don't even want to draw it up. But even though, that looks like a nice demand, we just didn't have the strength on the 5-minute or the 1-minute. So, yeah, for me personally, I'm ignoring that. The only move to be had throughout this whole structure was right here. Because right here was another little origin, but there was no gap right here. No gap. So that was the only gap. And you see the result. Price came down, tapped it, shot all the way up to the top of the megaphone. So that's basically it. All this is now efficient price action as far as I'm concerned. I don't see any inefficiencies. So we just got to look higher and lower. If we look higher on this chart, we got a 15-minute. We got a 15-minute candle here. Now it's obviously not the closest to the origin. So if we go higher, efficient. Okay, you got a little inefficiency here. You definitely got an inefficiency here. I think I was looking at that on a 1 hour. Let me go back to my 1 hour. Yeah, 1 hour. Okay, so 1 hour. Right, you don't have any inefficiency here, but you got a big inefficiency right here. There's going to be your acceleration gap, your fair value gap, your novice gap, whatever you'd like to refer to it as. So that would be a pretty decent spot on a 1 hour. And I put my alert here anyway just to watch this 15-minute supply. But the reality is I would think that the higher probability would be the highest one because it's closest to the origin of the strong move down. So now here's the thing. I would feel comfortable with taking this one here only if I get a reversal pattern. So let's just say price comes up, taps into my zone, comes back down, goes back, break this structure, and then comes back, and then I could look for maybe a smaller time frame zone there before I sell it. That's ultimately what I would want to see if I'm trying. Here, let's move this all over here to present tense. Okay, so for me to get into this trade, I would want to see a break of structure on this lower probability zone. Okay. So we come in, we tap it, we reject, we come back, make a little head and shoulders type setup, head and shoulders type pattern. But I want to see a break of structure of one of these smaller time frame swing highs. That would make me be interested in a pullback, and maybe we form another supply zone on like a 5-minute time frame right here.
Mm-hmm.
That would be the play for me. I'm going to be extremely picky because it's not close to the origin of the strong move down. But these ones can work out if I get that price structure. Now, obviously, I say this all the time whenever I show this. Price may break the structure, just keep going. Okay, c'est la vie. Right? I didn't lose anything. I didn't make anything, but I didn't lose anything. But the benefit to this verification is it can always go against me and chew right through the rest of the zone, right? Okay, great. I've avoided a stop loss. But the goal is, like I say, let's get the break of structure and then wait for the pullback. So it's a lot of work. It's a lot of waiting. But I'm willing to do all that work there because it's not the one that's closest to the origin of the strong move down. This one up here, feel okay about a limit order, right? Because you got efficient market all the way up top there. That'd be a decent limit order. So this is a confirmation entry. This is a limit entry, a limit order. Or if again, just like this, you could do the same thing up here, right? All I'm saying is the probability is the highest that would actually work out on a limit order, a sell limit. So a couple options there. Obviously, dollar yen since yesterday is obvious, or no, I'm sorry, a Thursday a week ago. Okay, strong downtrend. So it all just depends on the time frame you're looking at, right? Pretty choppy, ugly market on a daily, on a 4-hour, but looking at that most recent price action, right? Strong downtrend. So yeah, I'd be okay with taking a stab at this if I get my confirmation, or this if it comes all the way through. This is the highest gap. This is the highest inefficiency in the market, again, on that 1-hour time frame. So that is the highest probability sell entry right there, in my opinion.
Opinion.
Opinions are like, you know what, holes, and everybody's got them. Let me catch up on something over here.
All right.
Okay, perfect. What else have I got for you guys? Top setups wise. Bitcoin's on the list now. Let's look at Bitcoin. We haven't looked at Bitcoin very much of late. Okay. There's a 1-hour chart, uptrend, 15-minute. What have I got on here? Looks like I drew this gap yesterday. There's a little bit of a gap there. Now I want a confirmation entry on this one. Okay, we got a gap. I want a confirmation entry because price did go up, but again, it did not close over at recent high. Came back down. It tried closing part of the gap. So, gap traders would have probably gotten in right here, right? People that are just trading strictly on gaps, right? They would have made some money. Still some unfilled order potential below it. But the problem is, what session was this zone created in? Asia. No liquidity underneath it. No liquidity. No, I should say no. Sorry, I said the wrong word. No volume. No real strength. No gusto. So
lol.
100%. 100% confirmation entry I would have to see if I were to even want to take a stab at it. Probably won't want to take a stab at it just because of the low volume, but yeah, it's still there nevertheless. What I'm going to do is take my demand zone and paint it light green instead of my normal dark green. That always tells me there's something sketchy that I need to pay attention to. But the reason I even drew it to begin with is because you got a pretty efficient market all the way up through this origin of the move from here. Efficient. That's really the first efficiency. But again, part of that efficiency has been taken away from this move down. So though still leaves a tiny bit of just a tiny bit. Still leaves about, let's just say about this much gap, right? We still do have a little gap. But again, I'm knocking it because lack of volume. I'm knocking it because it did not close above this more recent swing high. It did eventually, which is the whole reason I'm even drawing it up. It was a nice move. It just hesitated. I would have preferred price to go on straight on up like this rather than down here and then up. So just little nuances that I like to look at. They really do help keep me out of a lot of bad trades. You guys probably get annoyed by seeing me disqualify so many things, but that's literally what keeps you safe. That is what keeps us safe. So rather than the old days, I was talking with
preachers asking at philosopher. Oh, you asking someone else in the chat there. When was this episode released? Not sure what you are referring to there.
Oh, we're live. We're live.
We're live right preaching. Now.
We as live as it gets.
Preaching the markets.
October the 2nd, bright and early, 4:37 a.m. my time. Caffeine's rolling. We out here today. What have I got here? Got a 4-hour demand a little deeper down. This demand zone is technically that candle there. I just incorporated the rest of this red candle just because of the low. So that's where that alert's at. In fact, I'm going to delete this alert up here. I don't think I want to keep. I'll leave it there just to see what happens. Not too excited about it. I mean, it did create itself and kind of break above and close above this high. So yeah, I see now. I just remember that's why I left it in there. But yeah, my favorite entry for Bitcoin is probably going to be down here. We got pretty good volume right there. Yeah, it's about all that's needed to be said on Bitcoin. Just need a discount. What about Ethereum? I haven't looked at Ethereum for a while. It's just ETH. Looks like I got ETH. The Ether. Looks like I got a couple daily demand zones because I always put daily in yellow just to separate the colors in my head. Got a 4-hour, looks like a 4-hour demand right on top of the daily. So that is a potential spot. Got this swing low point, so that tells me there may be some decent liquidity right up in here. Gonna be sell orders. So would it be too much to ask price to come down and maybe do a little liquidity manipulating here, drop in the confluence of the 4-hour daily and then buy? Might be a decent play. Now that's kind of fighting a little bit of it. Yeah, not really. You could look at that and say that's a downtrend, I guess, from this point up here. But I just like the power of daily and 4-hour zone confluence. They really do a lot of magic, even if it is kind of against the trend. Ethereum, it's, I don't want to say it's a perfect relationship like gold and silver are, right? Silver being the little brother of gold. But Ethereum, a lot of these cryptos, a lot of them like to track the Bitcoin. So with Bitcoin giving me a +6, +7 score, Okay, that makes me feel pretty good about an Ethereum trade as well. Might even like it better because we got that confluence, to be honest. But it could take forever to get down there. It may not be anything that happens anytime soon. So what we could do is just make a play on this more recent leg up. Well, on this more recent leg up, got a demand down here on a 4-hour. So there's a 4-hour demand. That may even still be a long ways away, but we'll go ahead and put it in there. 1 hour. Obviously, we got the demand down there as well. A lot of choppy nonsense up in this area. I don't even know if I'd want to get involved in it. Yeah, not really anything too compelling in this area. We got an efficient market here. We got a little bit of a gap above this candle, but you got a lot of sideways chop. So I don't think I want to get involved. If I get involved in this, yeah, it'd be either that deeper discount or this as a potential move here. I'm gonna color that yellow just because it's. I don't want to paint the color of green like I did the higher probability one. Or we'll paint it the color of yellow. Like proceed with caution, right? So.
Gotcha.
Let's see. Yeah, gold looks like it's trying to do a Chinese walk or cup and handle as well. We kind of already went over that. Am I getting anywhere close? Okay. So I drew this up yesterday.
Just quickly, Tiger, I would like to share something.
Yeah.
Might be getting into a trade here shortly.
Absolutely. Back in. Yeah, let's flip over to Richard's chart again.
Quite a few pros, but some con here as well. If we can screen quickly, that would be great.
27.
So AUD USD. Looks like I'm seeing triangles today all over the show. But I think there might be a triangle on the way now. This white line that we're seeing here has been on there for quite some time, actually. Again, just sloping a pitchfork upwards and, horizontal or parallel to one of my median lines projected from an area where price did not reach the median line. You can see there was support, support, support. And now price is almost like vibrating above and below that line there. We had an instance here on the 26th when we had this jump back upwards, where price finds support again at one of these angles. So if this is a little triangle, it might have a bullish outcome. So I want to really tune down to a smaller time frame and label this. Maybe that was an A, maybe that was a B, short-lived C. Now I'm hoping that this was a D, and now we're just doing that last little move lower before we get a move upwards. Right? Something like this. Now, quite often, the internal waves of triangles like to terminate at Fibonacci levels, very often between 61.8 and 78.6. Let's see what happened here previously from that high. So just underneath the 0.618 for the C wave, potentially the C wave, right? From that low to this low at the 8.6. So if we're assuming we're dealing with an E wave, area of interest would be for pullback after a little zigzag in itself. Let me get rid of that, clean this chart up. Would be nice if we can pull into that area over there. Right, might not have to be too finicky about this because price might just find support there. All these internal waves themselves trace out as zigzags or combinations of them. This one just being rather violent. I think this was a leading diagonal 5 wave. Move lower for an ABC. Very aggressive ABC to kick off the pattern. All right. So now just on a minor scale, we could also be seeing a little ABC. And then maybe that. Right, so I'm willing to take a stab at this. If we can just get a little bit lower, I can really try to be as finicky as I want to. Yeah, we got
Finicky.
our price already hitting this lower median line right at the 38.2. So I'm thinking from a trade perspective here, maybe to get into this, assuming that price will then break above the high that started this correction, that being at 0.66286. So from a risk reward perspective, I would actually like to target a bit of a higher area. So if I, let's say, were to get long here and not wait for another dip lower, does it make sense from a risk reward perspective? And I would say, yeah, not too bad. Not too bad. Let's just have a look at the execution platform. That price is run about 6645. 6615, 6645. I got the Australian dollar, US dollar loaded here. I just want to set up this trade to look similar to that one. Stop 06601. Around about there. Funk Soul Brothers, right about now.
Yes. Stuck. That jumped in my head too. That's perfect.
Yeah. Okay, and target was 6645. Right there. All right, so that's a setup. We might still move a little bit lower. That's 100% fine. I might obviously also be completely wrong about the trade. I'm going to take a small stab at this. I want to buy. I'm just going to with the markets. I just want to obviously figure out what my risk would be on here with and determine the correct lot size. Very little, obviously. Let's go 0.5. Let's go 0.86. Let's go even numbers. So risking about $116 to potentially make double that, right? So we are getting a little bit of a decline here. Be nice to get a little bit of a better price there.
There we go.
If we can make it to 6612, that'll be great. So you see, I'm trying to see where, if this doesn't hold, where we could see another decline to, maybe towards here. Right. That will actually allow me to maybe keep my stop or widen it a little bit more to give this a bit more space. But that might not happen. So I'm gonna hang on a little bit here. Sorry, I'm looking off screen at another window I've got open here. I'll show you guys that now. Yeah. What should I do? Let's pull that trigger, man. Let's get into it. There we go.
Flip a coin.
I'm currently long AUD, assuming we're getting close to the end of an E-wave. Gave it some space, hopefully enough. targeting the 06645 area. This is all market geometry levels based on my analysis chart, right? If it moves down a little bit lower, that's still 100% fine. So let's see. Right, I'll update that on the screen soon, and see how it goes. See how it goes.
Yeah.
Right, trade setup, long 0.8 lots, AUD, USD, stop loss 06601, take profit 06645. Okay. Maybe if we can get another setup going on the USD CAD, which has not gone down towards that area, but got my little magic tool that Coach James showed us. Maybe a little triangle in itself. Let's just see triangles all day long today.
Seeing triangles everywhere. You're going to be dreaming about them tonight.
Seeing triangles everywhere. So I'm still hoping that we can move a little bit lower and that this is just some sort of triangle and do that and then head up higher. Might not be a triangle. Might be. Who knows? Who knows? But would like to see price a little bit lower. I was using the 15-minute time frame. There we go. So, yeah, still interested in going long dollar CAD as well.
We are getting asked.
Tiger there on the train.
Yeah. We are getting asked about the German Ford, the Daxi, and the US 30 and the Nazi again by Miss Yoluba.
DAX, that's the German 40, right?
Yeah. The DAX. Yeah, DAX is...
I've got market geometry on this chart for most of the markets I've been following. And it was actually, when was this? On the 21st of September that I got into a trade here after an inverse fair value gap formed during this strong decline to the downside after price hit an area that I identified previously. Beautifully tagged that. It was a lower median line of a pitchfork, and I assumed that we were busy with, oops, why is that moved? A double zigzag. At the stage when short was of a short-lived ABC, you see there was an ABC, ABC. Here again, natures of the market, nature of the market, sorry. A expanding megaphone pattern for a B C wave. Right, price fails to break above the previous high. What does it do? Move lower again. What happens if you got an ABC that didn't work out? Switch to the next most corrective structure, which would be another ABC to follow. So two ABCs after each other in type pattern called a WXY structure. Here we also have a strong drop lower, and the B wave in this structure was a symmetrical triangle. So not exactly fractal in the exact same patterns, but a repetitive pattern nonetheless, a triangle, just a different shape or format during the B wave. This one took a little bit longer, this one much short-lived. Hits that area of confluence. It's also 100% extension of this first move low, which is typically what WXYs or ABCs like to do. And we had to move strongly back to the upside. I eventually got out of this trade with a little bit of profit. I don't know if you guys remember that. It's just because price moved sideways for so long and it actually extended into a weekend. So I don't hold positions over a weekend. And you can see a lot of up and down, up and down, up and down indecision. So, and then a lift off back to the upside. So I would say there's high probability that this was a WXY or double zigzag pattern and still have upside potential on this. Because if that was the end of a correction, one would assume that price would at least make a double top at minimum, or hopefully break above the starting point from where the correction started from, 24,648. See how it's now still finding a little bit of resistance price-wise. at this pitchfork, although it's determined the end of it. Let me get rid of all of these lines to clean this chart up a bit. Whoops, what did I do there now? Hang on. Sorry, I'll get rid of that yellow line. There we go. On the way up, resistance, break up, support. Now we're at this upper median line now. If we can get a decline lower, areas of interest here to join this potential to the upside would be this acceleration gap over here. We also have that median line, dash one slicing through it. So if you were to want to trade the German 40 or the DAX, that could potentially be a setup. If you're not long already and you'd still like to get long here, assuming that price will take out the high from where the correction started from, there's a fair value gap there. There's also one a little bit lower down. Right about there. Right, so that's the German 40. US 30, that's a bit more of your type of vibe. Tiger, if you don't mind showing that.
Yeah, we take a look at that. Got a
So,
few minutes and I'll...
your Lua, that is definitely areas I'll be looking at for potential pullback to get long on a German 40. Maybe take a screenshot of this if you're on your computer. I'll drop in some price lines there for you, just to make it a little bit more visible. But you're probably familiar with fair value gaps. Again, guys, fair value gaps occur all over the show. I just want to see fair value gaps, potential entry locations, especially when they overlap with market geometry levels. I mean, you can throw in a lot of things there. All right. So yeah, that's an area of interest, and maybe this one lower down. Maybe even if price were to do that, that's even a better one.
Yeah, that's the one I'm looking at right there, that demand.
That would be even a nicer one to get long. Right, oh, let me just drop in some more price markers here for you. Plus minus, right? So these levels would be a little bit different depending on which broker you're using, right? But I think you get the idea. This one especially would be really nice. Why? Also because we had all of these clusters of highs here as well. Resistance, resistance, resistance. Now turn support. Yes, I'm looking at angular support and resistance too, but if we just for giggles wanted to drop, let's say, a line in there. Let's make it a different color. So horizontal level. What do I do now? Come on. There we go. One could assume, it sort of lines up. Within this area down there, it would be quite nice. If we can get a pullback into it. It is very, what's this name? Far away at the current price. If this is the next leg higher or next phase higher, it's certainly looking very impulsive. And first wave up, A, B, C for 2. And now it could just, give us very short-lived pullbacks. Maybe
and I don't see anything in the way of it.
Or that third wave could still be, doing its thing. But the idea would be that price has got a good chance of breaking above the 10th of July high. So any big, deeper sort of pullbacks here would actually be quite welcome to potentially get long.
Yeah, and I'll take a look. Miss Yalua, we're going to take a 15-minute break. Right after the break, I'll definitely take a look at the Dow and the NASI for you. I'll tell you up front, those are two of the strongest ones that I'm tracking as far as the fundamental scores.
Absolutely.
So NASDAQ and Dow I really love. So, yeah, we'll go over that and more in 15 minutes, right after we go smack ourselves around and get a Scooby snack and hit the loo. Sound fair?
Yeah, so, same here. Yeah, to all our viewers, we'll be taking a 15-minute break. Don't go anywhere. We'll be back. Remember, we also want to be giving away a 5K Forex Challenger crown from Hola Prime. We'll dive into what you need to do if you just joined us right after our little break. So please don't go anywhere. We'll see you very, very soon.
Hi there, my name is Richard and I'm one of the coaches from Hola Prime. Join me as I take you behind the scenes on a little tour of what I like to get up to on a daily basis and beyond charts. I started trading 16 years ago, but through persistence and a very high level of dedication, I got to learn 3 invaluable lessons through my career. That trading should be treated as a business. It's really not a gamble. Consistent profitability demands effort, and there's really no shortcuts or any way around. And especially risk management, which isn't, it's part of your survival as a trader. You see, early on I realized that success in trading is only 20% strategy and 80% mindset and emotion. Now, as a coach at Hola Prime, my focus is very simple. Helping traders build systems with an edge, cultivating the discipline and focus needed to execute them consistently. You see, guys, the markets doesn't care about you. It will humble you if you let your pride override rules and reward you when you execute your plan without fear or hesitation. As a trader, I like to get outdoors as much as possible. Really try to strike a balance between trading and also leading a healthy lifestyle. Leading a healthy lifestyle for me could be anything. Hiking, I love swimming as well. Today is not really the weather to go and swim, but I will take the dog out for a walk. I'm really trying to force healthy habits so I can stay focused when I really need to, when I'm behind the charts, and all the stresses that comes with it. As getting outdoors really helps relieve those stress, and it helps me personally keep focused as much as possible. In my spare time, I like to play league darts with my trainers. And just as in training, skills and practice is everything. And that's a wrap, guys. Look behind the scene of who I am, what I do every day, beyond the charts. I hope to see you in the session soon. Take care.
Hola Prime, trade with transparency.
Well, hello everybody. My name's Tiger. I'm a coach here at Hola Prime, and I wanted to give you a quick little glimpse into who I am, both inside and outside of trading. So let's check it out. So I've been trading now for going on 11 years, and that first decade of my trading was all about technical analysis. And really over the last few years, though, I've really dug a lot deeper into fundamental analysis and sentiment analysis, seeing how the bigger banks and institutions are trading so I can ride their coattails, so to speak. They're the ones making the money. So I've just kind of looked at trading like Edison and his light bulbs. He's went through thousands and thousands of different prototypes in order to find the one that worked. Look, one of the things about trading that people get wrong is they think it's an overnight get-rich-quick scheme. So, for me personally, all the hard work was done well before I even picked up trading, and it all had to do with reading some good books. So, one of my favorite books right there, The Magic of Thinking Big by Dr. Schwartz. And as you can see on there, the chapters, best way to read this book is read chapter 2, 12, and 13, and then turn around and read the whole book. Powerful, let me tell you. And I'm sure you caught that above my bookshelf. One of my biggest things that I love doing is bowling. I'm a very competitive bowler. Bowled a lot of perfect 300 games, so they give me these nice little trophies whenever you bowl a perfect game. Got another one for an 800 series, basically bowling 3 games of 800 or higher in a 3-game series, so it's like a 250 average. Pretty good stuff, but competed national tournaments, state tournaments. I've won a lot of them, so bowling, that's one of the top hobbies that I have. Outside of that, I love singing. I like to go and belt some tunes, whether it's karaoke or just singing in my car, some carpool karaoke. But other than that, listen, on the weekends, I love nothing more than just to hang with my girlfriend. She's an awesome, incredible woman, and she kind of balances me out because she sees how hard I focus on trading. So it's just a very good reset at the end of the long, hard week of trading to just get away, just step away from it all, go enjoy each other's time, and prepare for the next week. So that's a bit about me. Yeah, just let us know how we can help. Just remember, it's not a sprint, it's a marathon, okay? The basics of trading are quite simple to learn. It's just all the nuances that take a while to really master. So just keep that in mind. Don't overwhelm yourself. We'll take your hand. We'll lead you to where you want to go. Like you say, just one step at a time. So with that, have a wonderful day. Look forward to seeing you in a session soon.
Hola Prime. Trade with transparency.
Hi, I'm James. I'm one of your coaches at Hola Prime. I've been trading for about 30 years. Can you believe it? Seems like an awfully long time. But in that time, I've learned a lot about trading the financial markets. And I've learned the best way to trade the markets. By dawn, I chase waves, chase dogs, and sometimes chase my own sanity. Trading, like surfing, is all about timing. Wait too long and you miss the move, and jump in too early and you just wipe out. If you're a new trader and you're struggling with your trading, I think you've come to the right place. I'm really looking forward to meeting you and helping you with your trading. I'm approaching a stop street now, and I'm going to have to stop. Emergency brake if there's traffic coming. And that's one of the things you've got to learn in trading as well, as how to keep safe. And it's one of the main things that I teach in my trading philosophy is risk management, which is not taught very often. Trading is a bit like driving a car, really. You've got to have a license, and in trading terms, having a license is like learning how to trade. And once you've learned how to drive and got the license, learned how to trade, you've got to get good at it. And my philosophy is to teach traders how to trade properly using the tools and techniques that they should be using. My specialty is swing trading, and it's a bit like riding the waves. I've been a surfer for a very long time, and swing trading is not much different. You've got to find the sets and catch the right wave and get out of the wave when it's time. A lot of people ask me, how did I get to where I am today? How did I learn how to trade? And how can they get to where I am themselves? I think the best answer to that is to get educated, learn how to trade. And there are all sorts of resources out there for you, including fantastic resources here at Hola Prime.
Hola Prime. Trade with transparency.
Hi, I'm Sam, one of the coaches here at Hola Prime. And in this video, I'm going to give you a short glimpse into my life beyond the charts. Outside of the charts, I love to cook. Anything with fresh local ingredients has a thumbs up for me. And when the weather's good, I like to go out, have a quick jog, keep myself healthy. I started trading almost 15 years ago, and believe me when I say, it wasn't an easy journey. There was a lot of ups and downs, mostly downs at the beginning, and it took me, I would say, almost 10 years before I could actually call myself a trader. Personally, I like to travel. I like to go to different places, see different cultures, meet new people. I also like a good spa day, you know, just sit there by a pool, relax, get a massage. You know, you can see from the screens behind me, it's just a lot of stress, a lot of digits, a lot of moving, a lot of fast moving markets. You can't spend your whole day in front of a screen. You will burn out, and sadly, you probably won't be as successful as if you just relaxed a bit more.
Hola Prime. Trade with transparency.
Hi, I'm Tony, one of the futures coaches at Hola Prime, and this is a little glimpse into who I am beyond the charts. I started trading 10 years ago. The early days, full of mistakes, but every loss was a lesson, and trust me, there were plenty of lessons. But here's what I realized. It's less about the perfect strategy and more about the mindset and emotional control. An example of this is cutting your losing trades and controlling your winners. Because if you don't, the proverbial train is coming and you don't want to be on the tracks when it does. That's why, as a coach, I don't just teach setups. I help traders build systems, not just on the charts, but in their heads too. Now listen, everyone wants to double their money overnight, but real growth, it comes from small, smart moves repeated over time. Be consistent and be patient. And don't be afraid to ask, because at Hola Prime, we're here to help you grow. Outside of trading, I'm big on exercise, travel, finer things. It's how I reset and remember what trading's really about. Profit? Sure. But what that profit can do for you and for others, that's what it's really about. So that's a little bit about me. Hope to see you in a session soon, and let's make some money, one trade at a time.
Hola Prime. Trade with transparency.
Hi there, my name is Paul, trading coach at Hola Prime, and this is a peek behind the scenes of who I am beyond the screens. I've been a trader for 6 years now, spanning from agricultural commodities to equity indices. My philosophy in life is to keep things simple but not simplistic, and to seek clarity, not certainty. In the trading world, these concepts help me embrace a mindset of valuing action over doubt, staying disciplined, evolving with the markets, and maintaining self-awareness. The road to becoming a successful trader is a winding one, but with each twist is an opportunity to reflect and grow. There are no shortcuts in trading, and as a coach, it is my mission to help guide traders down a clearer path to sustainable trading. As a new trader, sometimes the thought of earnings potential can outweigh focus on what truly matters. Long-term success stems from a system of patience, resiliency, and consistency. 2 books I highly recommend that profoundly display these qualities are Mind Over Markets and Reminiscence of a Stock Operator. Outside of trading, I love going to the local beaches and golfing. They allow me to clear my head and have some fun too. Golf is a funny parallel to trade. It requires total concentration, adaptability to changing environments, and the majority of the battle is between your ears. You must have a plan to tackle each hole of the course, combined with sound mechanics to execute each shot. Comparably in trading, plans and strategies are important to build and refine, but precise execution matters equally. That's a brief bit about me. I look forward to seeing you in a live trading session soon and expanding our trading horizons together.
Hola Prime. Trade with transparency.
Hi, I'm Daryl, one of the coaches here at Hola Prime. Join me as I unwind after a long day of trading and coaching. So, like I was describing, I like to get out on the trails, take a break from trading, kind of relax my mind, get some fresh air, get some sunshine. It's not bad that I have a number of trails right in my backyard. This one's about a 3-mile trail, and just over that hill right there is the Pacific Ocean. Sometimes I'll take a drive through the canyons and unwind my mind, but oftentimes grab the dog, come up here on a trail, just sit here, and it's beautiful, you know, beautiful out here. Every trader sees the market differently, and if you've been trading for a number of years and haven't had much success, instead of continuing to learn and research and add more, I would suggest maybe trying to unlearn some of the bad habits and removing some things that hold you back. Oftentimes, being simple in the markets is best, and it's only until we can remove and take away the things that we keep repeating that cause us the errors and the mistakes. Once we remove that, we can start to move forward, build some structure, and get profitable. I find that successful traders trade within themselves. They know their boundaries, they know what they're good at, they know what they're not good at. Just kind of finally forged away and had the discipline to stick with it. It's not trading the markets that's the key. It's truly trading ourselves. And once we can do that, then we can find success. Anyway, it's been nice to get to share a little bit about what I do in my off time and how I unwind from the markets. I look forward to seeing you on our Hola Prime TV channels, live streaming every day. And here's to your success. Thank you.
Hola Prime. Trade with transparency.
Hi, Hi, I'm Adeline, one of the coaches here at Hola Prime. But don't worry, I won't make you do endless push-ups unless you are up for the challenge. I'm here to help traders build discipline.
Yeah.
Welcome back. Welcome back.
We is back.
Again, the fastest 15 minutes of the day. It's over already.
That is right. Always reminds me of here in the States, during our football games on TV, sportscaster by the name of Chris Berman, he does a quick highlights video, and he calls it the fastest 3 minutes ever. So he'll go through all the games in 3 minutes, like a 1 or 2 highlights of each game. So that's basically what our break is. The fastest 3 minutes ever. 15 minutes.
But all good, all good. We are back. We are back. All right.
Dow and Nazi.
The philosophy.
Dow
you want to dive into that first?
Emisio Lua. Hopefully I said your name right, by the way. I'm taking an educated guess on that. Emisio Lua? Yeah, sorry. Emisio Lua. So let me know if I got anywhere close to your name. Is that close?
Monsieur Lua.
I don't like to butcher names.
Tell us where you're from as well, guys. Drop your flags in the chat for us. Let's know. It's nice to know where everyone's viewing us from, tuning in from.
I know he was from Nigeria because I think I saw that up top.
Oh, was he?
I think I saw that under his name. Maybe not. Maybe that was somebody else. Nevertheless, we'll get into the other part of his question. So whenever we get my charts up, we will go through that. I was just looking through and digging through some old alerts to see if I need to get rid of some of these alerts over here, but okay, there we go. So let's start from the top. So we got Dow, we got NASDAQ. They're both very bullish biases. The only thing going against those two assets is really the employment change number. I'm getting a red box there. Actually, let me just show that real quick. Yeah, so we're getting, for you, my friend, NASDAQ, Dow, both getting 13s. We've got one item going against the bullish narrative, and that's employment change. Other than that, there's a whole lot of blue. That's a good thing. The recent PCE and unemployment numbers were neutral, so that didn't really affect it bullish or bearish wise. So, that's as bullish as it gets. So, definitely want to be looking for some spots. So if I go back up to my CFDs over here, let's see here. There's the NASI on a daily time frame. Let's do this. I'm going to get rid of that. All right, so we had a recent correction, some price and profit taken up in this area, and then we're kind of rolling back around. So flipping on over to the 4-hour chart, got this recent spike up, pretty decent volume, got a 4-hour candle left behind, 4-hour demand. So that's on a 4-hour time frame. We flip it on down to a 1-hour. We got a 1-hour demand. Now, for me personally, since the smaller time frame, since any of the time frames is a little higher than the lower time frame, I would personally want to wait for a buy with some price action looking something like this. So I'd like to see price come down and touch the 1-hour. Well, I could see a little bit of reaction off of it initially, but then I would want to wait for the confluence to where the 1-hour and the 4-hour intersect. So it'd basically be right here, right? 1-hour, 4-hour. So now I got two sets of traders looking at that time frame. I got the 1-hour traders, but now I got the 4-hour traders. Get price to kind of come in because keep in mind, we are pretty pricey, right? Overall, when we zoom way out, we're buying very high. We're buying, like you said in your chat question, Musalua, we're buying quite high. It's pretty pricey. It's pretty expensive. So because we're buying pretty high, pretty expensive, okay, I just want to see it kind of confirm itself. It'd be one thing if if we were looking at this area down here, because this is a daily demand with I think that's like a 15-minute. If I zoom down, I think that was a 15-minute demand at the bottom of the zone, at the bottom of the daily zone. So I'd feel a little more comfortable about, more of a limit order down here, or maybe just a little bit of a bullish engulfing or a wick left behind on a smaller time frame. But up here, since we are buying in a high premium, it's got to prove itself to me, for me personally. I mean, you could do a limit order here, but, you might get that push back up, but you might have price just sink all the way through. So for me, I want to see a break of structure above this little point here. See a break and close right here, anywhere up here. Doesn't matter exactly where, as long as it closes somewhere on the north side of that white line I just drew, right? And then would love to see on a smaller time frame get a demand zone created somewhere in this area. And at that point, just have price retrace, touch that demand, limit order, you're off to the races. I'd feel more comfortable with a limit order here because we've already broken structure. So the price action, the market has already shown there's some buyers stepping in trying to push it back the other way, because it is inevitably a super strong uptrend, right? Now you can still turn around and make sure you get a bullish engulfing candle or a candle with a wick underneath, right? If you wanted to be a little extra cautious on it. And I'm not even saying I would limit order that, right? But I'm just saying a limit order in this example would make a little more sense because we've broken a structure. Change of character, break a structure, whatever you want to call it, right? So for me, as long as I can see some price action like that, and I've already got an alert on this up at the 24,658 level, just warning me, hey, Tiger, we're just about to jump into the 1 hour demand zone, 4 hour demand. So, but ultimately, I'd be wanting to buy off of this would be demand zone so long as we can form it. Now there's another option. If I zoom in a little bit, right? If you're a Fibonacci trader, you could take your fib from this swing low to this swing high, and you got all your options there, 50%, 61.8, right? If you wanted to buy the golden zone, right? This is your golden zone right here, right? So that's another option. There's another fib strategy on smaller time frames called the kill zone. So that'd be your 71% to 88%, right? That's its own little zone that a lot of traders like to use. It's not as mainstream as your golden zone is, but it is another zone that's pretty accurate as well. So you could either choose, this is based off of your personal preference if you like to use Fibonacci, right? Retrace to the golden zone or retrace to the kill zone, or really just anywhere under the 50% line, right? You're pretty well buying a discount anywhere under the 50, but specifically under the 66, right? Because now we're talking about curve analysis. Curve analysis translates into all time frames as well. So that's really a couple options for you. Just depends on your risk tolerance. And then speaking of risk, I mean, you could choose to have an aggressive stop loss and just put it underneath that newly formed demand zone, right? So you could put your stop under that newly formed demand zone. You could put it under the swing low. You could put it under the demand zones themselves, the higher time frame demands. So this is obviously going to decrease your reward to risk, but it's going to be a more conservative place to put your stop. If you wanted to be aggressive and increase your reward to risk, then you'd be putting it up here. So This is for you to decide, not me. Me personally, since I am more of a higher time frame trader, I would actually just leave it under here, most likely. But it depends on the side of the bed I wake up on. Let's put it that way. If I'm feeling frisky, let's squeeze it. All right. But let's say I've had a streak. Let's say, if I'm on a decent winning streak, a couple 3 wins in a row, maybe I do that. If I've had a recent couple losses, I might just be a little more conservative, right? It's just a mind game. And it's also how you have, it also depends on, do you have a good pulse on the market, right? If you're a little questionable about it, just be a little more conservative. But with having a high score of a 13 on my fundamentals, I mean, it wouldn't be I don't think it'd be the dumbest thing in the world to put that in a little closer, just to increase your risk, your reward to risk, right? Because if you were to do that, well, where's my tool at here? Let's just say you buy on the proximal line, right? And then you incorporate your stop loss. That's 53 points. You go all the way up to this swing high, 5, 10, 50, 20. You're looking at about a 4-to-1. If you're conservative about it and you bring your stop loss down here, well, now your stop is 100 pips to 300. So that's about a 3-to-1. So that just kind of gives you a couple options. And the other thing I like about the NASI outside of all this is the fact that we do kind of have a trend line going up from this bottom point here. I kind of put it underneath this recent swing. You can see price dipped below here. So you got some short sellers trapped, right? Shorts think this is a breakout to the south and turn around and went against them, right? Probably took most all of them, if not all of them, out on stop losses, right? Even if they had a big stop loss up here or a big stop loss up here, right? Price kept going. So you probably don't have a whole lot of shorts left unless they just are masochists and, they don't want to close out the trade because they want to be right? But these are really cool things to see. So that tells me that we still got a strong uptrend, The banks allowed price to go down before turning it around, or the retail traders or a pile of retail traders, right? Because you did run into some high volume, choppy action over here on a 1 hour. Well, what does that look like on a 2 hour? Okay, on a 2 hour, some people would look at this as a demand zone. I wouldn't, because I didn't get a gap. I didn't get a gap, number one, but number two is price wasn't even strong enough to push through this swing high and close. It pushed through this one. But I would have been a little more interested in that, number one, with a gap, an acceleration gap, right? But also to see price close up here. But nevertheless, there's still demand traders that would have used that as a demand, right?
Right.
So broke the line, hit their demand zone. I use that in air quotes because it just doesn't meet my criteria. And then price bolted upwards, right? So I'm going to delete that because I don't want to even look at that. But I have to give it credence because there was a lot of volume right there, right? So anyway, just getting back to the task at hand, that's basically what I'd be looking at. So I've actually got my alert. I just want to see price, what it does as it starts coming into the 1 hour demand zone. But again, I don't want to trade it till it gets confluence with the 4 hour below. So that's kind of the way I see Zenaze. I hope that helps on that one.
Okay.
And then lastly would be the Dow. Same thing, score of a 13. We already saw the breakdown there. Got another demand down here on a 1 hour. So I got this 1 hour candle all the way down at the origin of this strong move up. Got my little gap just ahead of it from the proximal line of the zone to the bottom wick of this second candle. We ignore the leg out candle because that's That's the initial move out of the basing action. And then we look at that second candle to find our gap. So turn my drawings back on and you can see that right here, right? So the white represents our gap, and then obviously the green is our demand. So I don't have any interest in doing anything in this area on a smaller time frame at all, because the 1 hour demand formed and pushed price up and closed above this supply zone. So this was a supply zone back here. Now, I wouldn't have sold this supply zone. I just put it up there to mark a potential barrier for where price was. Actually, back here when I was looking at some price action on like a 5 minute, you can see my old scribbles down here. But yeah, price went up, hit the supply, drove back down, took out liquidity underneath these wicks, and then formed a new base before pushing back up ahead of that. And we finally got to close above all this. So yeah, same thing. It's high on the overall curve when we zoom all the way out, but I want to use the same exact thing I just showed on the previous example. Give me a confirmation entry. So let's have price come down, bounce into the zone, give me a break of structure. In this case, it would look something like that. Again, this could always run off and leave us, and then we miss out on the trade. But the other side of the double-edged sword is it could just continue through and stop us out for a small loss. But this is a confirmation entry showing that the buyers are stepping in, trying to break a structure and trying to turn this thing around. Let's see here. Oh, let me redraw that because I don't think I drew it 100% correct. I was doing something else. Okay. Price comes down, comes up, comes deeper, comes up and breaks our structure, comes down to find a potential demand zone that would form here on a smaller time frame, and then ultimately up. So let me redo this. So now there's my break of structure right here. There we go. That looks better. I don't know what I was doing on that previous example, but there we go. There's our break of structure. So then ultimately I would love to see a demand zone form right here to where we can have price come down, tap in, and then buy the order. It's a lot of steps. Like I said earlier in the show, it's a lot of steps, but it's a simple way to keep you safe. Being this high up on the curve, right? We're buying in premium. We're not buying in discount when you look at it on the higher time frames. But for the small time frame traders, you're buying in discount, right? There's just more noise on the smaller time frames, right? So I have to keep in my mind the higher time frame premium and discount. So that's why I just want it to prove itself. So hit the initial zone, get a break of structure, get a pullback. And I personally look for new demands. Now, again, this is where you can always, if you're a fib, if you like the fibs, you can always pull out your fib tool, right? And I'll even do that too. If I don't see a demand form, I'll even do this from time to time. Hey, let's just see if we can get a pullback to the kill zone. I like the kill zone more than the golden zone. On these smaller time frames, I do. On the higher time frames, yeah, the 50%, the 61, those, to me, from my 12 years of trading supply and demand and using fibs, to me, the higher time frames are a lot more accurate on the 50, the 61. Hell, even the 38%, right? Even the 38% gets some pretty good bounces. So if I have a strong demand zone up here, yeah, I'll be interested in taking that. I may just not put a full position on. I'll just look for this same thing. Just prove it to me. But as far as, and even the 50, as far as limit orders though, yeah, give me at least a 61.8, but preferably kill zone on the smaller time frame. So yeah, there you go. But yeah, I got my alert set at 46,178. Just to scream at me so that I can start looking for this price action to form on the smaller time frame. So hopefully that helps on those two assets for you. Go ahead and delete that. Just get it out of my way.
Thank you, sir.
Yeah. But yeah, that's 1 and 2 on my list right there, since they're the second highest score outside of the dollar CAD trade, which I'm already in. So
Cool.
Good question stuff. Hope that helps. Yeah, you bet. Hello, Sebastian. How you?
Yeah, thank you very much. Guys dropping their flags in here.
Pirate flag. I love it.
Yeah. Yeah, guys, by the way, if you just joined us now, we still want to give away a 5K Forex Challenge account, hopefully during this session, right? So that depends on who followed these 3 very important steps. If you joined us previously and you haven't won, you might know these steps already. But if you don't know what these steps are to be eligible for today's prize, again, if you haven't won before, right? Step number 1 would be to subscribe to our YouTube and Instagram handles on Hola Prime TV and Hola Prime Global accounts, right? Keep on commenting during this live session. Again, if we don't find anyone that completed these 3, we might roll it on a later session, but we'll have to see, right? So that way we can see who's in the chat. Double check if you won before. If you haven't, select a name out of the chat there. Step 1 complete. Then we look at number 3. Make sure that your email is linked to your YouTube bio so we can get hold of you with the account details to get you set up with that challenge account. So that's also really, really important, right? Because otherwise we'll have no other way to get hold of you. Again, we would like to select a winner during this session. If you follow the steps, easy as that, you might be in line for today's prize. So please do stay tuned, guys, dependent on if we find someone or not. Otherwise, we'll roll it over to potentially a later session today. Cool.
Nice. Good. Good luck to everybody on that. Oh, what else have I got? Yeah.
So I got a question here for you, especially with your fundamentals. I'll read it out quickly. It's actually from Coach Hedgehog James.
Hedgehog.
For the Euro odd, asking, viewer asked, what are your views on the Euro odd and the channel it is in, considering the fundamentals of the US dollar, the Euro, and the AUD?
Yeah.
Your view on that?
Absolutely. Euro Aussie is kind of in my neutral area, so it's not really something I am keeping an immediate eye on, but let me go double check. Okay, Euro Aussie. So fundamentally, it's given me a neutral score, but it is a +3. So a neutral for me is +4 down to -4, right? That's more neutral. Totally down to looking at those on some smaller time frame technical, just the chart by itself. I only do that personally whenever I don't have a nice list like what you see on my screen. So this is kind of an embarrassment of riches right now, right? I got 7 very bullish items, and then I got 1 very bearish item, and then obviously, everything else in between. So yeah, let's just say I'm looking at Euro Aussie. So Euro Aus, Euro on, Euro on. Let's see here. Again, keeping in mind that it is a +3, so I would much rather buy it on a higher time frame than I would sell it. Smaller time frames, everything kind of changes. A lot noisier. Let's take a look. Okay, so 4 hour. Okay, so I drew up a 4 hour demand zone down here, it looks like. 1.7642. So if I'm just looking at this higher time frame, recent leg, let me see. I could probably find some way to short this, actually. Let's look here. 1 hour. Okay. 2 hour. Yeah, you can look at this at a 1 hour or a 2 hour, but here's your 2 hour time frame. A little bit of supply right here. However, it was not strong enough to push through the low, so that would probably be a little bit of a knock on it. Let's go down to a 1 hour real quick. Okay, so starting from the top up here. So here's what we got. We did have a 4-hour supply. This price broke that low. It broke this low. It returned slower than it dropped, which is good. I like to see the momentum slow down as it enters a zone. Okay. I love to see the strong drop, number one. That tells me that's got some gusto in it. But on the return up, I like to see that relatively, that 45-degree angle, if you will. Right. And then what happens? We wick in, and then the bottom falls out. So that supply zone is finished, but now we can keep an eye on this more recent move. Well, 4-hour, I don't really have a 4-hour supply because, well, this green candle for a short time acted as a supply because it pushed price down. What happened? Price wicked up, touched it, rejected it. So I'm not going to be interested in this area. Go down to a 1-hour. Okay. Now, just one thing to point out on this 4-hour supply, we did not have a gap. Did not have a gap. It was fairly efficient going all the way down through here. So I personally would not have sold that, even if I was watching it, just because of that. But if I change that to a 1-hour, things change a little bit. Because now I got a little 1-hour base and candle here on that same 4-hour candle before the big drop. So one could look at this as a supply, a 1-hour supply. Okay, so I definitely want to be aware of that spot. But in this more recent price action, of course, I did have this drop. It was 2-hour, 1-hour. I mean, you could look at it on either time frame. Again, it did not form a lower low, so potentially, if you wanted to try to sell this thing, I mean, obviously it's a downtrend since September 22nd, right? Just kind of an ugly one, but downtrend nevertheless. I mean, you could potentially look for a confirmation entry here. Have price come in. I definitely wouldn't sell this. I would not put in a limit order here. But maybe perhaps we have price come in, bounce, come up a little higher, break this structure. Kind of similar to those other examples I just showed. Get that head and shoulders, have this price action, find another supply on a smaller time frame, and then short it down to the lows. That's one option. Okay. One option,
It's
and
just
that's
stuck
just
in a
basically
triangle, man. Since everything is about triangles today, it must be in a triangle.
Yeah. So that's definitely a confirmation entry. Now, if I wanted to wait and see if price jumps all the way up to that higher zone, well, I'd be a little bit more. That's the highest supply zone closest to this origin of the strong drop, but it also has a really nice acceleration gap from here all the way to here. That's a nice gap. That's a really nice acceleration gap. So that tells me that there's some pretty strong selling action that occurred in that 1 minute or that 1 hour within this 1-hour candle right here. Okay. And it's at the top of, and that's also in the context of it already bounced on a 4-hour supply. So that's telling me we got some pretty good strength going down in this short term. When I say short term, I mean literally the last week and a half, right? But yeah, I would personally keep an alert right here just to see if we get any type of break of structure. So I'm actually going to do that just through the end of tomorrow. And then again, the fundamentals gave me a +3. So it is ever so slightly on the bullish side. But I can still sell price down to my ultimate higher zone I want to buy in, right? It's a little risky because you're going against the fundamentals, but you're in line with the technicals. So for me to buy this market, yeah, I'm waiting until we come all the way down here to this 4-hour demand. Because now we're looking at the origin of this strong move up. We're looking at this demand, which has a nice gap above it, showing strength. And then all this price action over here is showing an efficient market because we have candles that overlap candles to the left and to the right. So that's an efficient market. Yeah, price comes down here, efficient market. Okay, we had a little bit of a gap at one point in time back here. We had a gap from here to here. Okay, so that was a little bit of a gap at one point, but what happened? Price rolled over and wicked down into this demand. Wicked in, then just took off, right? So gap filled, demand zone mitigated, efficient market. So I'm not interested in trading off of any of this. That's my last remaining gap above a demand zone close to the origin of this strong move up. So definitely interested in that, to stay in line with the fundamentals. So I'm actually going to have an alert just under that supply for a potential move down, buy to cover down in this area with the expectation of turning around and taking the market the other way and buying. So I'm actually going to put 2 alerts on this. And that price action may take a while, right? So I'm going to throw it out through the end of next week, just so I keep an eye on it. And then I'll recap this here in a second.
Thank you.
So there we go. Yeah, the immediate play would be to sell the market with the intentions of buying to cover somewhere right around here, because you do get a lot of gap traders, right? There'll be a lot of people that buy the gap itself. So I want to be aware of that because there will be buyers here. I just personally prefer to wait for the unfilled orders in the demand zone. And I know gaps work because quite often I'll have a trade like this come down and miss my demand zone and just take off, right? So sometimes the gap traders win, sometimes the demand zone traders win. So for me,
but also you're going to wait for some extra confirmation, right? So if, let's say, the gap gets filled, you get your pattern, maybe, go in half the position you originally wanted to, or, 60, 70%. If you do get a slightly lower price, then enter again. If you're very confident about the setup, right?
Yeah.
But again, just to obvious with most of these things, we don't just jump in. It's mostly wait for some sort of confirmation.
Yep, that's right. Get as many odds enhancers in your favor, right? But yeah, that would be the move. Short sell, buy ahead of the gap, and then wait for price to come deeper into the demand zone, and then turn around and buy the market to the upside. That's pretty much what I would look to do. Take advantage of, both the supply and demand.
Thank you, sir.
And by the time price comes down there, hell, everything may change. We could very easily get a bearish bias by then. Well, then that would change. I'd just look for another supply zone. That one would have been touched, so I'd want to find a new supply somewhere in this area to go down. So hope that helps whomever that was that had specifically asked about that.
Coach James, someone asked and he just reminded us we missed the question, but there we go. Thank you very much for your deep dive on that, Tiger.
Yeah.
Just want to announce to all our viewers, guys, we actually have a few names in the running for today's 5K challenge account. So we will be giving away that prize during the session. We're probably going to do it in about, on top of the hour. 7 Eastern or 6 Central, depending on which time zone you're following. That's just over 10 minutes from now. So do stay tuned, guys. We're deciding on who's going to win that prize. There are a few contenders, and then we'll just probably draw straws, right? In the back end, because we've got a team that's helping us out. I won't be doing this, but they'll be figuring out who's today's winners. So do stay tuned, guys. 10 minutes, just over 10 minutes from now, we'll be selecting that winner. Keep those comments still coming in, right? Don't disappear after you've won a prize. And if you don't win today's prize, tune in again tomorrow. I'm sure there'll be another one up for grabs. Maybe, who knows? Just tune in, guys. Keep supporting this channel. The coaches, not just us, but also the coaches that's going to come on after us. And like, subscribe, do all those goodies. Hit the notification bell when a new video comes up. you do that, will be really, really, really appreciative. Thank you very much.
Yeah. Yep. Good luck. Good luck. Good luck. Good luck. Okay. What else have we got, Coach Richard? I've got a few more very bullish items we could be taking a look at. So,
Philosophers
keep it
asking
coming.
about EU. What about the EU? Euro, US
Oh, okay.
dollar.
Yeah. EU, we can definitely take a look at. Portuguese. EU. Okay. So Euro US dollar is giving me a bearish signal. It's a -5. So I'm definitely okay as far as a shorter term swing trade style. I'm open to looking at shorting this market. We got lower lows, lower highs. I like that. We have come up and touched this daily supply already, it looks like. So we got this green candle here. Big giant move down. Did break a low. Okay, we broke a low over here. So got my nice looking daily supply. Go back to a 4-hour. We got a 4-hour supply right in the heart of that daily supply. I've got my alert set at 117.91 with the intentions of shorting it once we touch the proximal line of the supply, which is 117.95. And let's see, did it touch this? Okay, so it has not yet touched the daily supply. It's missed it by about 3 pipettes, Richard. Pipettes, not pips.
Yeah.
I'm talking pipettes. 0.1 pip, right? So 0.3 of a pip.
New term, guys.
Oh, that's not new. I didn't create it. It's actually, they actually taught us that in the academy I went to,
really?
but I never used it.
Pipettes.
Yeah, I promise I didn't create it.
From you, to be honest. You could have taken credit.
Yeah, it's a real. Yeah, it's a real word, but it's just not one that's used a whole lot. But yeah, as far as selling this market, I just want to see a retracement up to this supply. I mean, that's really the simple, easy answer. I do have another smaller time frame supply ahead of it, so that acts as what you call a zone on top of a zone. So we got a 1 hour, 2-hour supply, 2-hour supply,
a double decker.
Yeah, so here's our 2-hour supply, and then here's our 4-hour supply. So it's a zone on top of a zone. So, there's options here. Obviously, the aggressive stop loss, if we were to sell that, would be to put it just ahead of the 4-hour zone like this. Okay, there'd be the 4-hour stop loss. But because that's not really adding a ton of more pips, it's adding another, 12 pips or so. I'm going to utilize the whole daily, which also incorporates the 2-hour/1-hour supply. So zone on top of a zone. That's pretty strong. So yeah, I would have my stop, up in this area. That'd be my line in the sand. Now there is another supply zone ahead, but I like this one because it's got confluence. It incorporates a daily, which is to me the best of all. Okay, it's even better than a 4-hour. And then let's see here. What kind of entry do I want to put in here? So 4-hour. Okay, we got a sideways, 3.5 day sideways congestion, sideways chop. This is retail traders fighting each other. Okay, so this is nothing more than one giant contraction box. So that's the diddle in the middle. That's the place to stay out of. Okay. I only want to trade zones, whether it's supply or demand. I want to trade them that's outside of these contraction boxes, outside of these chop fests, somewhere where it's close to the origin of the strong move, which is obviously what we have here. But yeah, just simply go for kind of like what I've been showing. Let's just get that entry looking something like obviously you're looking at it on a smaller time frame, but bounce in.
Yeah.
Get the break of structure, return, and then sell. And you could take this thing. Yeah, I mean, this is chop. So if there's demand zones in here, I would not be afraid of them at all. So I would see price going all the way through, all the way down to the origin of the strong move back up. somewhere in that area, we look for a small, for a supply zone on the smaller time frame. Yeah, somewhere in that area. That's basically what I'd be looking at for the euro dollar on that's again the 4 hour. I'd be afraid to go down to a 1 hour, a 15-minute zone, time frame, 5-minute time frame, because again, these people are just getting chopped up. So I want to wait and jump into a zone that's outside of all this junk right here. Hopefully that makes sense. Just want to avoid the chop.
Lots of junk. That was like
Dollar
yen was stuck in sideways junk for how long? Yeah.
Oh yeah. No,
Samuel Trade.
Yeah.
Asking Tiger, do you have a setup cooking or brewing? We're about to cook
I
on the
do.
time frame. So
I'm making money on the
to munch
dollar
on.
CAD right now. Yeah.
You're ready in that, Samuel. Samuel is up really
it's-
nicely, handsomely profit on the dollar CAD.
Yeah. About 2,600 unrealized, but I've already trailed my stop at minimum to 1,550 bucks. I just want to leave it a little bit of wiggle room, basically about 15 pips it looks like right now, to see if we can't bust through some highs. So yeah, here's my current stop loss on dollar CAD. So I got into the trade off this demand. I initially
that trade, why you took a Tiger. I mean, that's a really good example
Yeah.
of how all of this works. Sort of like the pattern you like to see as price touches down, target-wise, trading stops, all of those goodies.
Something to munch on. Samuel, let's go munching. So here we go. Yeah, starting from the 50,000 foot view, looking at my top setups. Oops. Yeah. What in the hell is going on? My mouse is acting funky again. It does this from time to time. Yeah. Dollar CAD. Hey, at least this one has a cable on it.
It can't run away.
The one I threatened. The other one I had to threaten to skip across my pond outside here. Dollar CAD, very bullish. A lot of blue, meaning a lot of these, everything's favoring the dollar, the US dollar over the weak Canada dollar. The Canada dollar is weak. US dollar is actually the strongest currency at the moment of the top 8 as far as exceeding expectations on all these reports: GDP, inflation, PMI, employment, interest rates, et cetera, et cetera. COT report, right? The banks increased their longs on the US dollar more so than the Canada dollar. Retail traders, retail sentiment. Retail traders are net short. So the average retail trader is net short, and I think it's by like 68% net short last time I looked. Yesterday, I think it was. So that's a contrarian signal on the retail positioning, right? When traders go short as a herd, the herd mentality, the contrarian signal is to do the opposite. Observe the masses and do the opposite. That's just one piece of the puzzle. But long story short, all these puzzle pieces are saying, Tiger, go out and buy the dollar CAD. So I did. I listened. This is my boss right here. This is my
next question is where to buy it. Don't just jump in. Determine where.
Right. Yeah. This only gives me permission to buy it. It does not tell me to go and hit the buy button right now, because I have to obviously look at my chart to find a place to time that buy. And when I did that, starting from the highest time frames, here's what I have. So I look at this on a weekly time frame. Okay. I've got a swing low. I've got a swing high. I take what's called my trend-based fib, and I just edited it to where it breaks it up into 3 blocks, right? So I just like this, right? So swing low to swing high. So what this tells me, what this gives me permission to do is the following. If price is up here, I'm allowed to sell the market. If price is down here in the bottom third, I'm allowed. Hungarian flag. That's right. I haven't talked about the Hungarian flag in a while, have I? Yeah.
Yeah.
But yeah, price is down here. I have permission to buy. There we go. There's Hungary right there. All right, this is basically the same thing as the Hungarian flag. I haven't whipped this out in a while, have I? All right.
No.
There we go. Sell in red, buy in green. Right? So that's all this fib is. And then the white is the middle. You don't diddle in the middle because you're going to get chopped to pieces typically. All right. So that's my weekly time frame. On a daily time frame, I want to find my trend. So first off, am I buying low on the curve, or am I trying to buy in the middle, or am I trying to buy on the high end? I prefer to buy low. That's where all the discounts are. Now I go to my daily and I look for my trend. Okay. Uptrend. Higher lows, higher highs. Right? Starting back here in mid-June. So higher lows, higher highs. Right? So I'm buying within the context of the trend. The trend is my friend until the bend in the end. So, then I just go look for a good demand zone on a 4-hour time frame. Now, I had some choices on this because obviously I was looking at this as a 4-hour demand on this more recent swing low. Okay, there was a 4-hour demand. Right. So price come down and clipped it. But going down to some smaller time frames, I got a 1-hour demand. And before price even touched it, I had some liquidity build up here from these traders that were buying the market, right? They're putting their stop losses down here. If they're buying the market, their stop losses are the opposite. They are sell orders, which banks and whale traders need sell orders to fill their buy orders. So you can see right here, price wicked in beautifully. Got the sell orders to fill their buy orders as well as unfilled orders from the demand. And that demand zone had actually screamed upwards, had some pretty good volume to it. So price came down lazier than it shot up, right? That's that 45-degree angle I prefer to see. I mean, if it's a little sharper, that's fine. As long as it's not sharper than the move up. That's the main thing to keep in mind. But yeah, 45-degree angle comes down, going to a 15-minute. You can see where it just clipped my demand zone perfectly. And that demand zone is a 1-hour and a 15-minute. So if I zoom back into that zone for just a second, okay, the bigger rectangle is the 1-hour, but the 15-minute is this 15-minute candle here. But in all these cases, I had a gap. I had an acceleration gap showing strength. So that's the premise of why I got into this trade. And a big red candle, expanded range candle for my volume spread analysis. We have to get creative with currencies because we don't have centralized volume. So you can pretty much get away with it just by looking at activity, which volume spread analysis is a pretty good way of doing that. It's not as accurate as volume would be on the futures traders or the stock traders, but it's about as close as we can get. It's kind of my way of, getting creative, if you will, right? So anyway, that's what I use. But yeah, price drops. Gotta get creative. So price drops in, leaves me a wick. Looked really good on the 5-minute, the 1-minute as well. And I basically bought at the proximal line here. So you can see price just shot up right away. I mean, over that first hour and a half, I was already up almost, about 1,500, right? Broke this high, took out this liquidity. And from there, I just managed to trade. Stop loss was initially under the demand. So I initially moved my stop loss here. Actually, it was a little closer. So I give us some wiggle room, but also log in some profits. I don't want to take a loss after I had a big move like that in my favor, right? But I still want to give us some room because it's giving me a super strong fundamental score. So trail my stop, and it came down pretty close to tapping me out, I got to admit. It came down and missed my stop loss by 1.8 pips. But the trading god said, you know what, Tiger, we're liking you today. We're going to just reverse price back the other way. And then we ended up having a new high and then another pullback. And then when we broke this high and closed on this candle right here, that was my sign to move my my stop loss, my trailing stop loss up, lock in some more gains.
It's really good training there, Tiger, because I mean that was a lot of patience involved, and not trying to just grab profit. Lots of patience,
And
especially after those wicks to the downside.
The hardest part of the patience was when price ultimately hit the 30-minute supply zone up here.
Yeah,
that's where the patience really kicked in, because the smart thing to do, I would say the highest probability thing to do would have been to take my profit here. But I felt good about the fundamentals. The Canada dollar was the only currency that was depreciating compared to the dollar, because the dollar was falling against most everything because of the government shutdown threats and then ultimate reality. But the Canada dollar, because it's only exceeding expectations on one of their 9 reports, right? It's getting a very ugly score, the Canada dollar. So, I just wanted to, I knew it was going to get a reaction off the zone. Ultimately, it did. If I flip this to a 1-hour time frame, we now see a doji candle acting as a 1-hour demand. So I ultimately moved my stop loss to where it's at now, which is right here. Basically that current red line. So this is where I currently am. I'm still giving it about anywhere from 10 to 15 pips wiggle room. Well, ultimately 20 from this markup here. But yeah, it's just been going sideways all throughout Asia, all throughout the end of New York yesterday. So, hopefully New York opens up and they'll either do one of two things. They'll either scoop up some shares or they'll sell it more further. So worst case scenario, got 1,500 locked in, but best case scenario, I've got a higher time frame resistance clear up here. That would be about a $5,800 profit. That's the prize I'm eyeballing.
Nice.
And to me, it's worth going sideways for a couple of days. So, yeah.
Awesome.
That's where I'm at.
Good job, Tiger.
Yep. How y'all?
Guys, we have picked
We have a winner?
We have a winner. Right, so we were going to say we're going to announce a little bit later. So here it is. We have found someone that followed all of those steps. Again, guys, if you haven't won today, you haven't won before, right? Please do tune in tomorrow. We're probably going to give away another prize. So don't fret. It's really, really easy to win. Actually, a lot of these guys in the chat have won already. So let's put our hands together or do a little bit of a drum roll. So today's winner of that 5K Forex Challenge account goes to Sebastian Bayer. There you go. There you go. Congratulations, Sebastian. You today's 5K Forex Challenge account winner with Hola Prime. Please do stay tuned. Keep an eye out on your inbox for those account details. You also need to visit our Discord channel. If you haven't joined already, please do. And in there you'll find some more information, steps you need to follow to claim your account, right? So again, from our side, congratulations. And to everyone else, again, if you haven't won, don't fret. Come back tomorrow. We'll probably have another account up for grabs for you guys. So congratulations, Sebastian. You are today's winner. You're welcome. You're welcome. As easy as that, guys. As easy as that.
Yeah, and Sebastian, just to answer your question right before you realized you won an account, will the price tend to continue rising or will it break? Because it is currently very concentrated. So here's the way I look at the reason why I'm still in this trade. If I go back, again, we did have a 30-minute supply, right? But what happened before it hit that 30-minute supply? We had the 1-hour demand create itself and push in. So to me, the higher the time frame you go, the stronger the zones are. So a 1-hour demand to me is stronger than a 30-minute supply. So yeah, it's concentrating because it's bouncing back and forth between this demand and obviously, that supply. So I am banking on my fundamentals eventually luring more buyers in. That's what I would pretty confidently say if it weren't for the fact that we didn't have a government shutdown right now. So New York City could come in, the hedge funds, the banks, and they could see all the nonsense from our shutdown and turn around and short this, right? That's fine. If they do, I mean, I got a stop loss down or a trailing stop. I've already locked in a gains. I'm just going for the bigger prize. I'm just gonna hope that the fundamentals keep price up. We did kind of make that cup and handle like Coach Richard was talking about earlier, right? So if you're a cup and handle trader, which I'm not really, but it is kind of fun to see this, right? You got your little cup like this. You got your handle forming as we speak, right? So, you know,
I bailed out of my dollar, AUD Aussie dollar trade. A bit of a loss there.
Oh, okay.
It's just not going my way.
Okay.
So I think this triangle I've been talking about is still doing its thing.
Gotcha.
But anyway, just note that. So I'm out of there. But yeah, that dollar CAD trade looks really, really nice.
Yeah, and again, I don't really get into all these patterns, but yeah, if you're a cup and handle trader, well, if you're buying the handle, well, you're buying also in a demand, right? So that's extra confluence. That's odds enhancer. I mean, that's my primary reason to buy a chart or sell a chart in a supply. That's my primary, but you know, like you said earlier, Richard, sometimes they'll wait for what? Like, would you say like a 50% retracement of the top of the cup to the bottom of the cup or the saucer?
Generally, if you actually see a retracement deeper than 50% from where the top of the cup to the bottom of the cup, then the probability of a strong breakout reduces. That's what they say. I mean, you could probably give it a bit more wiggle room, 0.618. But if you start going deeper than that, then the chances, it could still go higher, but the chance that your breakout is, going to extend very far, apparently significantly reduces. Apparently there's some stats involved with all of that, right? So obviously the higher it closes, the stronger it proves that price action is. More buyers are actually buoying the market up type of vibes. Just the way I see it. Well, not I see it. There's actually been some stats and some research done on that, apparently.
Yeah, I mean, it makes sense because the 50% retracement's right in the center of that daily or of that 1 hour demand. You could also look at that on a 30. I mean, there's if we look further at this price area, this is the 1 hour demand, but now you got a 30-minute demand right here. You could go find more confluence on the 15 probably. Yeah, this green candle here, add it in with this red candle. There's a 15-minute demand. What's it look like on a 5-minute? Yeah, there you go. You got a tiny gap on this one. I mean, you're getting a lot of confluence. You do have a little bit of a gap from here to here. So yeah, you could probably look at that side-eyed and see a 5-minute demand as well. Or yeah, the point is you got a lot of confluence. You got a lot of different time frame traders looking at that same spot. 50% demand zone. Yeah, pretty good. Pretty good spot. So that's why I'm confident about staying in this trade. Yeah, it is going sideways, but we'll just see if the cup and handle pattern decides to work its way. Looks like the last 10-minute candle was pretty sharp up, so that's a good sign. That's a pretty good sign. I like it. I'll take it. Okay, so my unrealized is up to over 3,000 now, just because of that one candle. So there we go.
Nice.
Just gonna stay in and hope for the best. All right, get rid of that.
Nice.
Get rid of that. All right, there we go. What else we got? Anything else from you guys and gals in the chat? just let us know. I do have a few other alerts I could be looking at, but I want to keep it open to you guys as well. See if there's anything. So,
yeah. Got any charts that you want us to have a look at? Let us know.
I will take a quick look
Again,
at
probably
the
mention
three
this
most
before.
bearish.
If you haven't joined, sorry. Okay, go ahead.
Yeah.
Go ahead. Sorry.
Yeah, I'm just going to say, unless we get anything else, I'll just take a quick look at some of these bearish items. So CAD yen is giving me a -10. So that's a very bearish asset. Okay. So looking at CAD yen over here.
Tyke, I'll be back now. Just give me 1 minute.
Oh, sure. Yeah. All right. So CAD yen, there's really a couple options over here. Let me just update over here. Just good. Okay. Okay. All right. So yeah, -10. Okay. So we got this 4-hour supply over here, keeping an eye on. Little gap underneath. We go down to a 1-hour. Got a 1-hour supply. So I got my confluence. You could also even look at this as a 1-hour supply right here. So this is another example of a zone on top of a zone. But I would prefer to sell from this top zone because it is right at the origin of this strong down move. And it does have a little bit of a gap from there to there. A little bit of an acceleration gap, right? Showing strength. So you have a gap here as well. But that's the one closest to the beginning of the move, the origin. So I've actually got my alert set in there, 106.28, with the intentions on selling on the 1-hour supply. I just want to see what the 15-minute looks like. Okay, so we do have a little bit of a gap on the 15-minute as well, right? Just going down to some of the smaller time frames. As long as I can get the 1-hour traders, the 15-minute traders, the 4-hour traders all looking at the same price point, I like my chances. So yeah. Now, because this is in the middle part of the higher time frame move, definitely want to make sure that's a confirmation entry. Get my break of structure. Well, I'll tell you what, I drew a couple of these funky. I must have did it in a hurry. All right. Bam, 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 bam. All right. Get my confirmation entry. Break a structure here. Break a structure here, retrace. Hopefully we get a new zone created or a fib, whatever, and then short. So that is a confirmation. Looking at the candles up through here on a 4-hour, now let's take a look at this. Do we have any inefficiencies? Well, we got candles overlapping here, all the way down through here. There's a little bit of a gap on this candle. A little bit of a gap right here. All right, there's an acceleration gap. There's a fair value gap. There's a novice gap.
Yeah.
And then we look at the candle right above it. There's our supply zone. All right, so that would probably be the highest probability move. Problem is it's a long ways away, and we do have a couple other zones that could potentially have ideas of their own. Right in the middle, we got a 1-hour supply. Not the strongest of gap. And we're starting to go down into smaller time frames. We're starting with a 1-hour time frame because we don't really have anything there on a 4-hour. I mean, you do, but this ain't my favorite, right? We'll keep an eye on that, and we do have a gap there. But again, it really just depends. When you start getting a few different sets of zones in the middle of a strong move down. Again, obviously the highest probability is the one closest to the origin, but it's a long ways away. CAD yen doesn't, I don't think, move that fast. So we could very well, because it is a super strong bearish bias, we could very well just tap the first zone it finds. So confirmation entry here, probably a confirmation entry here if it keeps going. Up here is the highest probability. You could look at that as a limit order or still a confirmation entry. So I've got my alert set because I want to first keep an eye on that zone right there. 1 hour inside of a 4 hour, pretty decent spot, confirmation entry. If it cuts through like a hot knife through butter, I got another zone up top. If it cuts through further, I got that ultimate higher probability zone at the very, very top. So that is CAD yen. What we got? What we got? New Zealand dollar, Aussie dollar.
Dollar CAD looks like a really nice trade to be in still. Maybe even some opportunity to still get in.
Yep.
Just didn't hit my area. It was very close. Damn it.
Yep.
Okay. It's nice when you're in a trade that's just running and you've been in it for quite some time already.
Yeah,
really
especially with one especially with one like that, since it pays positive swaps each intraday changeover. Yeah, because if I look at my carry trade,
I think we had a question a while back about what do you mean by swaps? Remember there was a while back. So maybe if you could let us, fill us in a little bit for everyone, especially in the chat there, that's unfamiliar with what swaps are. Benefits and obviously pros and cons, right?
Yes. So here's my carry trade scanner. Now this isn't showing all of my currencies. I just copied and pasted the ones that was at the top of the list. But when you see a currency pair in blue, you will get paid the difference of the base currency rate, which in this case would be the US dollar. If we're looking at dollar, well, dollar CAD's down here. So we'll just use that. Okay, the US dollar interest rate is 4.25. So again, we had that 25 basis point cut. What was that, last week? From 450 down to 425. So interest rate 425. Canada dollar, their interest rate's 2.5%. Okay, so if you subtract Canada's 250 from the US dollar's 425, you get a difference of 1.75%. So at the end of each intraday session, the switch over from Wednesday to Thursday, from Thursday to Friday, et cetera, right? You get paid I get paid 1.75% of my total. It's the total equity in that trade. Is that right? The total, the total I risk. So that just simply gets credited to my broker, right? All the blue ones you see means the base currency is higher than the quote currency. If you see one in red,
size though that you're holding.
Is it position size? Yeah, I haven't really dug too deep into it. All I know is, do I get paid or do I get debited? But yeah,
exactly.
it's based off. But it's based off this formula. Yeah, as long as you're long on a blue one, that means the base currency is higher than the quote currency, which means you get paid the difference. If you're long on one that's red, well, that means you got to pay that difference, because it would actually pay you if you're short the ones in red. Euro dollar is an example, euro pound. I wouldn't want to be short the tour, because look at that, 36.25%. That's crazy. Or I'm sorry, I wouldn't want to buy that. I said that backwards. I would not want to be long on a swing trade, because being long on a swing trade means you're having to pay 36%, right? If you're short,
that's
dollar Turkish.
Yeah, but that's a dollar Turkish lira, right?
Right. Yeah. So this one would pay you, if you're short the dollar Turkish lira, 36% of your position.
Yeah, but what is the dollar Turkish lira doing? It's going up, isn't it?
Oh, yeah.
So it's almost like they're paying you to short it, to strengthen the lira.
That's basically it. But yeah, this is the carry trade in a nutshell. Just make sure if you're long, you want to have, if you're long anything, you want to make sure that your interest rate's higher on your base currency, higher than the quote currency, and then vice versa. If you're short,
Right.
make sure that your quote currency is higher than your base currency. So that's kind of hopefully the easy way to explain it. I hope that makes sense. But if nothing else, I would suggest go to DeepSeek or ChatGPT or whatever AI service you like, and you can ask it all about the carry trade, and it'll explain it in detail for you. So that's why I'm okay staying long, because I'm getting paid that difference. I think, was that the only question we had on that? What was the other question we had? I think we were done with it. That's right. Okay, perfect.
Yeah, philosopher, just join us again tomorrow, bud. I'm sure you'll, increase the chances. The more you visit, the more your chance increases of winning a prize. So, again, to Sebastian. I think, Sebastian, didn't you join yesterday for the first time? Or was it
Yeah, I
the
feel
day
like
before?
I saw that name yesterday or the day before.
Yeah. Nice.
Good stuff. All right. So in that case, I already did the CAD yen, and there's really only two other main ones I wanted to go over real quick, and that was New Zealand dollar and Aussie dollar, because they're giving me a -8 and a -7. I'll go through this real quick, and then I need to go to the Lulu real quick. So New Zealand dollar shorts got a daily supply. All right, there's my daily candle. Big gap down, gap down to here. So a gap. And then a 4-hour inside of it. That's really about all I need to see. I mean, it's not the one closest to the origin of the move, but it is a daily. And again, to me, I'm in love with the daily zones, especially when they have a 4-hour inside of it. So might still look for a confirmation entry. If I get a super strong candle, a wick up above it, I may just take it. I may just take a bearish engulfing candle. So to be determined on that. But yeah, that's basically where I got my setup is 0.8 or 0.58. So 0.585, a little bit of a psych level where the 4-hour zone starts, right? Actually, right on the 0.585 level, 0.5850. So that's going to be my setup for New Zealand dollar shorts. We did hit a demand all the way back here, albeit a lower time frame than the current daily supply, 4-hour supply. So that's a pretty good short opportunity. Aussie dollar is probably going to look pretty similar. Yep. So 4-hour supply. We had a 4-hour supply here, and this is a great example of why it did not work out. Well, it's because it wasn't the one closest to the origin of this move, this little swing high. So this one was initially one I was keeping an eye on. I did not get a confirmation. Oh, okay. Yeah, I did not. I did. Excuse me, guys. I did not get a confirmation in this green candle up, so I avoided that. So that's old news. So now we're in this one here, and it's just been going sideways.
It's been daddling inside of it.
Right. Going sideways. So probably going to avoid it at this point and just focus on this 1-hour supply up top. Not as excited up here because I don't really have a 4-hour supply. I guess you could count this. Now, let's take that back. It's just got this big ugly wick. Big ugly wick above. So that's technically a 4-hour supply. We did have a gap right there. So that by definition works, except I don't like this. I don't like the wicks. I don't like the wick up top. I don't like this wick back here. So it's just kind of a noisy mess right there. So I'll probably just end up skipping Aussie dollar altogether, to be honest, unless we want to put some more extra credence into this 1-hour supply, 1-hour/2-hour supply up here. So yeah, that might be a little more of interest, except I didn't get a ton of volume. I don't like that part of it. I think I'm honestly just going to skip Aussie dollar. So that rounds that out.
Sebastian says that he's been active from yesterday in the chat, but joined previously during the Forex Fire sessions. There we go. Thanks,
Nice.
man.
Yeah,
Same with the
we sure do
philosophy.
appreciate it.
Yeah. Thank you very much for the support.
All right, so Coach James asked about Euro Aussie earlier, so we did get a retracement down to this short opportunity, or up to this short opportunity. Good volume. Broke structure, but we did not close below it. I wished we would have closed. If we would have closed down here before having this retracement, I'd be all over this one. But I'm definitely going to make sure and get a confirmation just in case I want to short this. So up, come down, come back up, break this structure, come back up, see if we can find a supply zone somewhere in this area, or the golden zone of the fib or the kill zone for a short. So this is going to take some time. Now I can always look at this price action, obviously on the lower time frames as well, right? All right, so there's actually a 15-minute right there, 15-minute supply. So it's getting close to that one. 15-minute supply with a little gap under it. Breaking it down even further to the farthest one down. 5-minute. Well, we got a 5-minute right here. We got all kinds of supply zones. I'm just going to put a line on that one rather than drawing a box. If it's a 5-minute, a 3-minute, a 1-minute, I usually just put a line on there. I don't care to see a small, a tiny rectangle when I scale back out to my higher time frames. So there we go. Just going to take some time, but might keep an eye on this thing on a 5-minute time frame. 5-minute, 1-minute time frame. See if I can start getting some smaller breaks of structures. I drew this. Let me clarify this, and then I gotta take a quick minute to myself. I drew this on a higher time frame, but I mean this for the smaller time frame, just to clarify. So let me actually redraw it on a smaller time frame. Right? I should have clarified that. So recent breakup, recent, basing action. Actually, that's kind of a demand right there. Okay, so demand. So here's what I would want to see now. Now that I'm on the 5-minute time frame, let's come up, tag in here. Let's break this structure before coming back and then shorten. So on this return right here, let's see if we can create a new supply zone, or you can use the fib, whatever kind of appears, right? Something like that. 5 minutes, I could get real aggressive and look at it on a 1-minute, and just as long as I get this price action, break a structure. I'm just gonna count that as a break of structure because it was a demand zone. This is a demand zone. It's just not one that I would ever buy because it's just hit a higher time frame to supply. But as far as creating breaks of structures, break a structure and close. Get the retracement. You can use your fibs from here or go for supply like me, or a combination thereof, right? That would make it even stronger. But that's my current play. So I'm going to look at this.
Coach James says, short that sucker. The euro is weak and the Aussie has a commodities bid under it.
Yeah. Yeah, absolutely. I love it. I'm absolutely going to do it. I'm going to put an alert down here just so I can see if there's a break of structure. I'll just throw it out for later this morning. Throw it out through midday. All right. Mm-hmm. That way it yells at me saying, oh, okay, Tiger, we broke your structure like you asked. All right. If it can do that and turn around, might be interested in selling this. I personally don't want to really do a limit order on this. I mean, if I come back and I see a super strong bearish engulfing candle right here, as long as I got some pretty good volume spike, okay, that'd be a good trigger right there. And then I may not have to worry about this break of structure idea because it may just turn around and just sink on me, right? So there we go. That's what I'm after, my friend. We good to move to your chart for a second? I got to run. Take care of some business.
Put yourself to watch yourself, Tiger.
What's
I'll
that?
take over here.
Okay.
Go do your
Perfect.
thing.
All right. I
See you
will
soon.
return.
Cool, cool, cool. All right, so finally crude's broken the supply area. Support area. What am I talking about? A few times that prices hit it. Once, twice, three, and now the fourth time. I had a little bit of bounce yesterday and finally broke underneath it. We're in this little gap, which I labeled the gap fill at the moment. Tiger's got a demand zone a little bit lower down. And then we also have these clusters of lows over here. So again, I discussed a little bit earlier in the session how I feel that this entire pattern that we've seen here looks a lot like this pattern that we've seen over there. So like a bit of a fractal behavior, right? So price then obviously had a resulting downwards move when it ended, and we're having that now again. Same with this one, we had multiple areas of support. Same with this one, multiple areas of support, and finally we are now seeing a move lower again. That being said, sorry, let me just get rid of that. Get back to my cursor. You have to zoom into price a little bit here. I still think we got some more downside potential, at least to, fill that gap. Maybe it could be a good intraday trade to take. Hopefully I'm not too late on the party. I'll still decide, see how things play out. But already a very strong downwards move. Technically, I think, yeah, more downside potential, but I would be very wary in thinking that price is going to break these lows that were set in earlier this year in April. Reason being is that this move that we've seen higher here traces out nicely as a 5-wave impulsive sequence, and all this crazy sideways movement followed by sharp sell-offs to me screams a lot, or looks a lot like, should I say probably a better word, as a correction. Could be wrong, and obviously the lower this goes, the more danger it is of breaking those lows. But could just be that this is all corrective and that price will then maybe bounce back up at some stage. It is sort of at areas where I'll be interested in while starting to see some support step in, but not as yet. If we can start seeing a very strong move back upwards, acceleration to the upside, then that might be an early indication that the next leg higher could potentially be bullish. Been very choppy, difficult to trade, trying to figure out price structurally wise, pattern wise, what's going on in WTI. But after this fractal behavior, there's still some downward space that price could move towards, right? Or drop downwards a bit more. But I think once all of these areas have been cleared, maybe towards a 60, maybe even lower, get everyone like really bearish, and then boom, bounce back upwards. So that might be what we are seeing in WTI. Sorry, I'm just reading a message on the side here.
Boom, baby, boom. Boom, boom, boom. Boom, boom, boom. Getting a little reaction off of the gap, it looks like. Yep.
Yeah, still not full though, but close. Sort of hovering inside of it at the moment. Probably going to see during the New York session a bit more volatility step in there. Yeah. Indices, I didn't share the NASI. We had a question about the NASDAQ a little bit earlier on. We had a lot of all this mess that I labeled as a running flat. This also was done towards the end of August. And I was actually expecting this to be a correction, but for price to break below this previous low here was set on the 20th of August. That didn't occur. Sort of like made a double bottomish type of vibe, and boom, back off to the races, all the way back up. Again, strong impulsive behavior. This is my current working angle or pitchfork that I'm using this anchor point from as a starting point from the 3rd of August to this higher high on the 13th of August to where I believe this correction ended. I don't think it ended here. I think it ended here. So that's my final anchor point on the 2nd of September. Using a standard pitchfork setting because it contains price action better than a shift or a modified would. Obviously also looking at the strong slope we're seeing to the upside, it contains price within the boundaries of the upper, central and lower median lines. You can also clearly see that if I draw a line parallel to one of my median lines of this pitchfork, let me just get that drawn properly, and we project it from previous areas where price or other shot this yellow line. We have support, 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 support. We had a little bit of an overshoot there previously. And should price, and I actually don't know why that angle's not 100% right. Let me just copy and paste that again. Project that from this high that we've seen on the 23rd of September. Then those make upside targets. So again, still think the Nasdaq's got more upside potential. For high, I don't know. It's up in the sky, obviously, again, right? But from a angular support resistance perspective, we could still see a move towards 25,096. So just below the 25,100 level. Obviously, the longer price takes to get there. If it continues higher, this angle slopes up, so that price dynamically change as time goes by. All right, so that's just for now. I will keep on updating these levels if people ask about it in the future. Then we have this upward sloping. We had this overthrow previously residing at 25,200-ish, plus minus, right? So those are upside targets, or projections is probably a better word to use, because obviously if you have to trade this, you still have to figure out where to get in to maximize your profit potential, minimize your risk potential, right? So those could be potential targets, projections. If we do, however, get a move lower, and I think, Tiger, you were looking at an area lower down. Was it this area here?
Right about that point. Yeah. Yep, right around there.
Right. My thinking here is if we fail to see a move into these projections to the upside, and let's say we start seeing this happen, right, pretty soon, whether it's a sharp decline or like a zigzag type of behavior, whatever the case might be, maybe even into here, that I would still be bullish. Like you said, you got a very strong score on this as well, Tiger. I mean, clear to see as daylight. The indices are still very, very strong. So I'm just looking at the potential expectation of what we could see if this happens and still be bullish. And that would be that we might be then tracing out some sort of an ending diagonal pattern. Maybe we come a little bit on the curve if price would come down, maybe towards this dash median line. But for this to work out, I mean, I'm not saying it is going to, it's just I'm trying to formulate a plan B here. If we do see a sharp reversal today or tomorrow without price reaching this upper median line, then, oh, what am I doing? Let me just get my, where's my trend line gone? There we go. Then this might be what we're seeing, or what we might get. Something like that. And quite often when you see an ending diagonal, they also end very abruptly and you see a reversal lower. Again, does this mean that this massive bull trend's over? No, I'm just looking at possible scenarios that could unfold over the coming days, maybe even weeks, price action wise. So yeah, for the time being, that is in the back of my mind. I'll take that off just in case you want to take my word for it, which I hope you're not. But yeah, we are heading higher, at least towards 25,100-ish upward side projection on the Nazi.
Yeah.
All right. How are we doing for time, guys? We still have 30 minutes, I believe. Am I right saying that, Tiger? Before we end the Forex Fire section.
Yeah.
So if we got any more questions, guys, now's your time. Let us know. Let us know.
Yeah. What you got? Tell us what you got. What you got?
Right.
What you got?
Cool.
Boom, boom, pow.
Sorry, I'm just catching up on a convo on the side here with our support team. Amazing support team, by the way. Shout out to them. Doing a great job.
Absolutely. 634.
Footsie.
Okay. Footsie.
Yuki 100.
Footsie in a while, yeah. What is Footsie? It was on the list for a
gold for you after the Footsie
period.
And this is an example of where I followed a sequence to the upside. And you know, you don't even really need to get the entire sequence right, but it gives you a good framework or expectation of what to expect. Generally, after 5 leg sequence, expect a decline. I was actually thinking that we're going to get a bit of a deeper one, which we didn't get, right? So I was proven wrong, but at least for a short while, actually looks like a week, bit more than a week, there was a decline, right? So now price has moved back up again. I haven't looked at the UK 100 in quite some time, so it's probably a good idea to keep going with the sequence, right? And get rid of all of these drawings and maybe start looking at this next sequence to the upside. Why? Because it was after a substantial correction. Now I say substantial, this is actually very small in the bigger picture. We are looking at a 4-hour time frame here, not a daily or weekly. So this would be what I'll use next, right? So you can clearly see on the shift pitchfork sloping to the upside that we have hit resistance, or price has hit resistance at this upper red warning line. A few instances of resistance at the center median line, resistance turned support, bit of resistance, and boom, broke back upwards now. If this is another 5-wave sequence to the upside, what we expected after a correction, right, you want to start seeing acceleration like we've seen in the gold. Again, Sebastian will look at gold in just a bit. But something that extends way further than, you know, the height of this first wave. And this is where eliticians, for example, like using fib extensions. Impulsive waves generally travel towards 1.618, 1.786, 2, and also 2.382, 2.618. Gold's probably at bloody 100.618 at the moment, if you ask me. But it is really, really a good way to measure if this is impulsing. You can definitely see that it kind of is, right? Short little pullbacks, sort of like parabolic move back to the upside. But if we were to break above this red warning line, I'll switch this to the standard pitchfork setting. And even with this setting, you can see that there was previously support, our resistance support at this area. So I'll actually prefer this setting because of this impulsive nature of this move. Expecting that we could see still further continuation upwards, at least till 1.382. We're not there yet, at least towards this upper median line. So that's around about 9,528. Again, guys, that's just a projection. We could see a decline downwards again, but because the trend is bullish, even if we do get one lower without moving higher, then I'll use this previous median line that acted as resistance as a potential area of support this time around, potential entry, and then trade back up, and still assume you might be dealing with that third wave. Right, that's if we get a deeper pullback. But that is what I'm looking at. I should have actually left those counts on there. All right, so that's my view on the UK 100. Let's switch back to gold. Right, I talked about gold a little bit earlier on. I think it was with James. We identified one heck of a zone there that we could potentially move in towards.
Yeah.
But fine, I'll leave that on there for the time being. Clearly, guys, this is what I mean by when a sequence ends. In this case, a correction was a triangle in gold that ended on the 30th of July. First phase higher, second phase lower, and we're still in this parabolic third impulsive phase. There's been no reason for me to think that we have even started the fourth phase. And the fourth phase would just be corrective, but still be bullish over the long run, with then another fifth wave to follow, and then potentially, much later, get a deeper correction. Okay? So I'm not saying this is it. Prices at all-time highs. Yes, surely it is. But I'm not saying that's it now. You know, we're going to now start moving aggressively lower. What I'm saying is that your third impulsive waves, they typically have very short-lived pullbacks, very shallow pullbacks. We've clearly seen that on the way up here. Prices now also finally broken out of the boundaries of that pitchfork I've used to track this upwards movement. So what I'll do is keep the same angles, but just double it up, because these angles will very likely continue to work into the future until they don't anymore. All right, thus far, lots of evidence that they have worked really well, even recently. So I could continue dragging this up and up and up for as long as gold gives us little, small, shallow pullbacks. However, if we're going to start getting a decline, I'm not saying it's happening now, but if we're going to start getting a decline that lasts a little bit longer than 3, 4, 5 days and actually starts moving lower a bit more aggressively than these small little ones that we've seen previously, that will be my cue that we likely dealing with that fourth wave correction in the sequence. And it could turn out that
the third leg on an Elliott wave is the third leg of the Elliott wave, is that typically the longer of the legs usually? Is that right?
Yeah, it is. Yeah.
Okay.
So you generally have a start, kickoff, second wave, and then third wave is generally the longest, at least 100% of the first one, but generally much longer than your first wave. Then you get a corrective structure again, and another push back upwards. All right, so that's just obviously a very rough drawing. Yeah. But that's typically what you look for, and then get a deeper decline, right? But, you know, it's difficult. I'm not going to tell you that it's going to end at the 1.618 extension of that first move upwards, because it clearly didn't. Look at that. It's way surpassed those areas. But knowing gold, it is well known to have excessively expansive third waves when it really gets trending, which is what we're seeing here now. Right, so we can go up and up and up and up. So the only thing that's helping me at the moment, knowing that using this type of analysis to figure out, maybe identify another buying opportunity, is to wait for this fourth wave, right? I think it might be an idea to buy intraday now, but if you're trying to swing trade this at these current highs, I won't do that because it's so overextended, right? I might be wrong in like 2 weeks from now, price sits over here. And so be it. That's 100% fine. I don't really care.
Right.
But I'm looking for and knowing what price action is likely to do to signal me or give me the cue that the fourth wave has indeed started. And I want to see a longer term downwards decline. And if that happens, I can then also use geometry again, slope my pitchforks or channels or whatever I decide to use, whatever fits best over the price action if we do get that decline, to determine an ideal zone that I can then go and fine-tune and assume that it would potentially be where a fourth wave might end and then swing this back up to the upside again. Still being bullish, right? So just cautiously so. But then again, and full disclosure, I'll be saying cautiously so. So since here, but then again, until we get a bit more sideways movement or downwards sharp reversal that lasts longer than these previous little declines, until then the strong third impulsive trend is still, or phase is still in play. Until it's not. And whenever that might be, I have no idea. So there we go, Sebastian. That's my view on gold.
No tenemos una idea.
Gold.
It did bounce into a 5-minute supply zone, so perhaps we get a little bit of a pushback down towards maybe a 15-minute demand, maybe. Got a couple little demand zones. 38.56 is where I have one alert on a 5-minute
looking
zone.
at silver for us, Tiger.
Silver, yeah.
Can you have a look for us, please?
Yep.
Let's switch over to Tiger's screen, please.
Yeah, back in. Let's get on over. And I'll also just look at the little zone I found on gold real quick. So, yes, gold kind of making that same little bowl, that little cup and handle, that little Chinese walk. But, yeah, we are bouncing into this supply as we speak. There's a little one up here, but it's pretty narrow. I don't know how much I want to trust it, but yeah, so we're currently in here. Now we got about the best thing I could come up with on a smaller time frame would be, so we got pretty efficient market all through here. Now we do have this inefficiency here. We do have this 5-minute demand all the way down here, but if we want to count this as a reset on a smaller time frame, well, we kind of have a little bit of a demand forming right here. And I would probably incorporate that red candle as well. A little bit of a demand here. 15 minutes. So 15 minutes should be stronger than a 5-minute. So, if you could look at a confirmation entry if we can clear and close above that 5-minute supply and then come back for a buy like that. That would be one example. If we don't get that and it chews through, we got 5-minute zones at the origin of this strong move. So that's basically what I've been looking at this whole Forex Fire session. But yeah, it's just been giving us that slow, steady grind up during the Euro session. So not really anything to play at the moment. But yeah, look, speaking of silver, kind of a similar picture. A little bit similar of a picture.
Wow, that looks like an ascending triangle with a breakout to happen soon.
Yep, sure does, doesn't it? A little bit of something like that, give or take. Yeah, but yeah. So basically on this one, let's see. Yeah, I'm still keeping an eye on this 5-minute demand down here. I love the gap that came out of it. I like that. That's pretty strong for being a small time frame. I like that. So still keeping an eye on this. Obviously, this is the origin of this move up. I mean, there is another demand right here with a pretty strong gap, but it is higher up. I just would prefer the origin move down here. One could potentially, even on this small time frame, look at this. Let's delete that, actually. I mean, I'm still gonna draw it up just so I can be aware of it. Who knows? Maybe we get a confirmation in here. Quite possible. Could get a little bit of a confirmation. Got a double bottom right here. There's a bottom. There's a bottom. So perhaps there's some additional stop losses hiding down here. So that, yeah, I could see that being a possibility. We're getting a breakup now above the top of the triangle or the pennant or the flag or whatever you want.
Mm-hmm.
So, well, yeah, as far as this demand,
look at that. Wow.
Yeah, it's flying now, huh? Where are we at in here? Look over here real quick. So yeah, we did have a supply right here. Let's see if it has enough gusto to break through it where it's at now. So supply number one up here. We have another supply right there with a really strong push down. That's nice. That's pretty nice. So we're almost broken through this supply. I think I just moved it. Yeah, there we go. So yeah, we are almost. Yeah, so we're pretty well through this supply. So that tells me that we have some pretty good strength in this up move here. Now we got a lot of wicks. Not really a whole lot of as much as far as a gap on a 5-minute. What the hell does a 1-minute look like? There's a 1 minute. Yeah, I don't think I like any of that. No, yeah, probably the origin here. That's probably where I'd be most interested in keeping my potential trade on. But yeah, we got our 5-minute there. So that's really the next challenge. See if we can break through here.
What is that on 15 minutes? How many minutes do you have left? 14. Yeah, if you get a close above that zone as well, maybe like a retest towards the breakout area as well could potentially be an intraday. But now it's just going to fly.
Yeah. Yeah, because here's our 1 minute. Yeah. 10-minute, 15-minute. I mean, you could potentially look at this as a demand, 15-minute demand. You've got, well, I don't know. You kind of have a gap here as well. Now that I look at this, so there's a gap here. There's a demand. There's also a gap from here to here. Now, and then price based here and then shot through like a rocket. So I got to keep an eye on this. Now the range is getting quite narrow, but depending on where this candle closes, we could have a really strong gap somewhere up in this area. I mean, we still got 11 minutes left. So by the end of our show, we'll know where this gap closes or, where this candle closes. But yeah, I mean, if we close anywhere up in this area, then, I mean, I got to keep an eye on this demand zone. But I would prefer this one because it's closest to this immediate origin of this strong move up after this sideways stuff. So I'm going to delete that for now because I need more information about where it's going to close. But if it closes up there, that's going to be a hard.
It just flies and breaks through the top one as well. Yeah.
Very well could, yeah. I mean, if we have a gap, if we have a close anywhere up in this area, then I have to pay attention to the origin of that gap. But again, we are pretty narrow. We're talking 5 cents, right? We're talking about a 4 cent range. That's not a whole lot of wiggle room. So I might as well just kind of look at this as a zone on top of a zone, kind of like that example I showed earlier, or a zone on top of a zone on top of a zone, and just incorporate this whole area. There's really a couple options. The conservative way to do this, let's see, what does a 4 hour look like? Yeah, because I mean, I would have to wait for this candle to close on a 4 hour time frame, but yeah, I mean, this 4 hour candle right here would incorporate all those demand zones. But I would need more information to be interested in that, because I would want to see this candle shoot up like it is now, close up here somewhere to create a gap so that I could look for a return down. And then rather than trying to shoot for any one of those individual zones, that's zones on top of zones on top of zones. So I'd probably just buy the 4 hour and put my stop loss underneath all of it. Something like that. Probably what I would do. Because I think it would be a little too aggressive to try to, go down and pinpoint one of these smaller time frames. I don't know. I'm going to delete that.
Yeah.
Would be 4 hour for now since I need more information. But
look at it go.
And then the other, and then another thing to look at would be follow this trend line, right? Follow this, like you pointed out. Perhaps if price comes, so we got a 5 minute close. So there is a 5 minute gap now. So perhaps we just get up at some point, price up, bust through there, come down, hits this demand zone and the trend line. Then that would be a decent confluence. It'd be an extra odds enhancer.
Yeah.
Or perhaps we go lower.
Oh, it's flying.
And or we go lower and we trap some shorts, right? Shorts think they're going to break out to the downside. We tap into the demand zone, and then the traders push it back the other way to trap the shorts and take that liquidity. So there's really a couple options there, depending on how aggressive you want to be or not be. But yeah, it's definitely flying, isn't it?
Mm-hmm.
Look at that. Woo.
Yeah, silver loves doing it.
And that's
stay sideways, frustrates, and then bam.
Yeah, New York session. 7 a.m. Central Time, so that's 8 a.m. New York. That's the hour and a half preceding the main open. Right?
Yeah.
So,
Travis, we got about 7 minutes? Wow, time is flying.
Yeah,
about 7 minutes before the end of our session. So, guys, please, again, if you've got any questions, let us know. We still have a bit of time left before we finish up here. Again, to Sebastian for winning that prize. Congrats. Hopefully you were able to claim that, or if not, join Discord. Make sure you follow the steps to claim your account as well. To those that haven't won, please do join tomorrow again. You'll get another shot at one of our giveaways. And I don't know how long that's going to last for, guys. So you might as well follow the steps, right? Also, like and subscribe. Do the thing. Hit the like button. Share far and wide with everyone that you know. Everyone, that might enjoy trading. That's an interesting trading.
Gold is...
Yeah.
Gold and silver looking the same, and then obviously the inverse. The inverse would be my dollar CAD, right? So it's obviously doing the inverse. So it got an initial sell-off, and looks like it's trying to turn the corner again. Right, so that's good. I mean, it dropped me, what, 4 pips, right, so far. And then getting the equivalents on Zag nuts.
Oh, look at that now. Yep.
Golden Zag nuts.
All those inefficiencies as well.
Mm-hmm.
So definitely some volatility creeping in there. That's for sure.
Yeah, that is a huge gap. So we did get it on a 5-minute. We still need more information on the 15, but we also did just get the 10-minute gap. Well, no, we need that candle to close. So yeah, so far we just got the 5-minute gap.
Got to close first.
And of course, I'm going to keep a close eye on dollar CAD. Yep. Let's curl on back around.
Cool.
Good stuff. Fun session. Fun times.
Yeah, we still have a bit of time, guys. So any questions? 4 minutes left remaining. Also, do make sure that you join the pre-market pulse, which will be 15 minutes after we end this session. Great coaches coming on board there. Coach James and Paul G, right?
That's right.
We'll take you into the futures session with our futures coaches. If you haven't watched them trade live yet, please take the time and do the effort to go and check them out as well. Lots of action during the New York session. Trading the futures.
Jersey Shore name. Yep.
And you were welcome, Sebastian. Sorry, missed that. Hopefully I helped you out on gold. Again, obviously still very, very bullish. Yeah, it's going to be interesting to see how things pan out after tomorrow's NFP numbers.
Yep.
But, yeah, who knows, right? ADP numbers were pretty ridiculous. But it's happened a few times before where they came out and then your NFP numbers surprises. So I have no idea how that works, to be honest.
Yeah.
Expect the unexpected.
I think they take a lottery basket with all the different balls in it. They just pull out a ball, you know, enough balls to equal whatever they're going for. Are they going for something in the thousands, the 10,000s, the 100,000s? They just pull out enough balls to throw a number together, right? Rather than doing all the counting. All right. So
Webb asking if the consistency rule also affects us in the challenge phase. I believe it does. Webb, speaking under correction there, always best to go view our website, right? I always say, like, you know, there are quite a few rules there. Obviously, you have to follow some rules if you want, you know, the opportunity to start trading with real money, right? So, or, you know, be able to get drawouts if you do pass the phase, that is. So for each specific challenge, there might be some differences in some of the rules. So make sure that you do go and follow that properly, or read through it properly, sorry, to familiarize yourself. You don't want to get caught breaking a rule you were unaware of and you were just that close to passing your challenge. So that's probably one of the worst feelings. I've done it before, back in the past, way before Hola Prime. Now, I've actually done it a few times. It took me about 3 times back. I think it was in 2014. Before I passed a prop trading challenge, when it was sort of like a new thing back then. And yeah, both of the first times I tried, before the third successive time, like I just got there, you know, maybe it's nerves, I mean, psychological issues, trading wise, emotional, you know, stuff that holds you a little bit back. As soon as you get close to passing the challenge, you make a mistake. Breaking one of the rules, it's not nice. So make sure you do familiarize yourself with those rules as best as possible. Try to avoid not having your challenge revoked and having to start over again. All right, guys, I think that's about it. We've reached the end of our session. We thank so much for everyone for the support. Please join us tomorrow. We're going to have a special guest on. If you want to find out who that is, please join us tomorrow. It's going to be interesting. Also, make sure that you stay tuned, like and subscribe, as I mentioned, and please do go and support our next coaches during pre-market pulse as well as the future session. So thank you very much for watching, guys. Take care and goodbye. Cheers, Tiger.
Adios.
Adios.
Cheers. We'll see you tomorrow. Enjoy.
Hola Prime. Trade with transparency.